All right. Hello, everybody. We have a decision from Mr. J. Powell and the Federal Reserve. And the decision, we are going to hear from him in about 12 minutes. We will analyze every syllable that Jerome Powell says. The decision, for those that are just tuning in, is to pause. We are not getting a cut. We are not getting a hike, but we are not getting a cut. Now, that is kind of what we all expected. That's not that big of a deal. Pretty much all of us thought that would happen. What's actually pretty crazy, and, we're going to see if this ends up playing out, but this is what we've got going on. The Fed is expecting 2 cuts in 2025. 2 cuts in 2025. So that's good, right? That's what we kind of thought they would do, 2 cuts in 2025. However, 7 of the 19 participants this year, or at least for this summary of economic projections, are expecting 0 cuts. 0 cuts. So correct. Almost half of the members voted for 0 cuts, which is not really a good thing, because I don't know if this market trading at 22 times forward earnings for the S&P 500, a lot of these stocks having aggressive multiples as the market assumes that we will inevitably get these rate cuts, which the market, for good reason, has a argument to say we should be getting rate cuts. I don't know if we keep these multiples on equities if we get 0 cuts, but 7 of the 19 participants believe that we are going to get 0 cuts. Another thing that's really interesting about this is that if you look going into 2026, so in 2025, we're expecting 2 cuts. 2026, we're expecting 1 cut. Each cut is 25 bips. And then 2027, 1 cut, which means based on current projections, by the end of 2027, rates will just be 1% lower than they are today. Now, to give some context, 1% of rates, or 100 bips of rates, right? 1 point, equals $300 billion in savings on the interest. That's why Trump today said he wants 2 points of cuts, 200 bips, because that would be $600 billion in savings. Right now, we're paying like $1.1 trillion on the interest on our debt alone. And, now if we're only going to get a 1% move by the end of 2027, I mean, dude, that's not going to be enough to deal with the amount of payments that we have to do on our interest for the debt. So, I mean, this is pretty incredible. Powell's not live yet. He'll be live at 2:30, so we got about 10 minutes until he goes live. But this is pretty incredible. I did not set it. 7 of that's what it is. That's what they're saying right now. Powell's not live yet. Powell's not live. In about 10 minutes, he'll be live, and then we will kick over to him and see what he has to say. Does it feel political? A little bit. Audio is having an issue. Why does it always randomly? Okay, are we back? Are we back? This, let's see. Is it good? No, it's bad. Okay, hold on. Let's see. Okay. No, still bad. What is going on, bro? No, now it's back. What is going on? Okay, now we're good. Dude. Every time StreamYard finds a way. Yeah, we're good now. It's like literally, bro, it's like freaking, it's the most basic IT thing. You plug it in, plug it out, and then boom, you're good. It's ridiculous. Amit will now blame StreamYard. Yes, I will blame StreamYard. It's not my equipment. I can promise you it's not my equipment. It's freaking StreamYard. Nonetheless, we're back. And you see how it randomly happens? It was good for like 5 minutes, then it goes out. Now it's back after like I plug it in and out. It's weird, dude. It's so weird every time this happens. New studio, I think not only do we upgrade from StreamYard, but we just upgrade everything at this point, even though I don't think it's my equipment, but whatever, it is what it is. Anyway, 2 cuts for 2025. 2 cuts for 2025 is how the market is thinking of this. Now, the good thing is they are pricing in 2 cuts, which is important because, again, you can see right there, federal funds rate projection 3.9. We need those 2 cuts by the end of the year, I think, to sustain some of the multiples that we have. But if we don't get those 2 cuts, then it's going to be a little weird. Now, in terms of how the equity markets are reacting to this, first of all, Robin Hoodie, 78, baby, 78. It is nice to see above 78. I mean, what's really cool about 78 is that It's up 4% of the day. Stocks are up right now in anticipation of what Jay Powell says, even though this summary of dot plots was a little bit bearish, but we'll see what he ultimately says. This is the basic same price we were at right before the S&P inclusion. I think we were at 77.50. So if we get a close above 78 today, or even at 78, that would be incredible. And now it's just a question to see if we can in that momentum. Now, the big mover of the day is none other than Oscar. 1880. At one point, this got to 1924 today. I told you guys in the morning, I was very close to buying this thing last night at 1630, just like pulling the trigger on 1,000 shares. And I chose not to because, again, I didn't know enough about the company. I said, you know what? I'm not going to do the Stanley Druckenmiller invest and investigate. I need to have a little bit more context here. And if I did, I would be up 16% today. So congrats to anyone who is in this name. I mean, absolutely incredible. I do have people secured for the deep dive, including Steve. I was on the phone with Steve like 2 hours ago, and let's just say Steve was a bit upset because I was going to buy just for the hell of it because I was looking at it last night, but then I chose not to. I chose to be a little bit more responsible. Nonetheless, if you did buy last night, it worked out. Steve wrote a whole article on it. And someone just tweeted at me that they bought Oscar because of Steve's article. And I sent that to Steve. And he was like, people keep buying these stocks I write about, but I don't buy them, a.k.a. Steve himself. And it's hilarious to him every time. Every time. He did this with Oracle, called it at 120. Did it with Elf, called it at 50. Did it at Oscar, called it at 15. He just didn't end up buying. But if you did buy, congratulations. We'll have a deep dive tomorrow, 9 p.m. Eastern. I got a bunch of people from the community joining me, including Steve. And so we'll go deeper into that name. S&P 500 right here, 598. That's down about or up about 0.2. 4%. Coinbase as well. They launched something. I don't know exactly what they launched, but it's something that's up 15%. I'll try to get you an update on Coinbase in a second. We got JPAT talking in about 5 minutes, but they announced a new product today that I don't fully understand. I don't think it has to do with stablecoins. I think it has to do with something else. And the market got very excited for it, along with the Stablecoin Act passing from the Senate yesterday. So that probably also is helping as well. So you got Coinbase right here, big mover, 15%. MicroStrategy 369, that's down about 1%. Palantir 139, relatively flat. Tesla 323. Tesla did hit 329 at one point. Nvidia just below that 145 level. PayPal's dumping, don't know why. That's down 3%. Grab also down about 2.3%. Oh, a little bit of bearish news on Grab. Someone bought 500 grand worth of puts at 450 above the ask. If you look at the options flow, and above the ask means that they paid a premium just to buy those puts. Now they could be hedging their position. So that's one thing you can think about. Or they could think, hey, Grab's definitely going below 450 by April or by July 18th. So although we saw the 41 million shares on the dark pool yesterday, which we still don't know if it's a buy or sell, we did see some definitive bearish activity in terms of price action, or at least in terms of the option flow today. Maybe that's a hedge, so it's not that bearish, but if it is more of a bet that Grab gets below 450, then that's something we're going to have to watch out for going into July. Enphase right here, 3611. That's up about 3.4% right now. Google, Waymo is launching in New York. Waymo's getting ready to launch in New York. That was some big news today for Google. Google not really affected by that 175.87, but that is some news that we saw. SoFi, 1522. Great day for SoFi. Great day for SoFi at 1523. And you got a lot of these other names that are pumping all throughout the day. Circle, dude, this thing is up even more than where it was when I left the market open. 24%. When I left market open, it was 168 or 170. What's another $15? What's another $15? Circle right here, 185. I mean, it's a hell of a market, right? A lot of these fundamental names not really making a move. Circle's up 24%. Coinbase up 15% on the day. ASTS also had a great day. ASTS right here, still up 9%, 43.72. It did hit 44.54. HIMS as well with those gummies that they launched today, 61.14. And then obviously the big one, Oscar, which, to me, even though I'm not in it, I'm happy for people that's in it because this is another retail win. This is another big retail win. A lot of retail, by the way, if you look at the year-to-date on Oscar, they went through some hell. It opened at 13 in the year, pumped to 17. They think they're all clear. Then comes all the way back down to 12. Pumps back up to 14, comes all the way down to 11, pumps all the way up to 18 a month ago, comes all the way back down to 13, and now it's back to 19. So it has been a roller coaster if you've been in the Oscar train, and you've had to kind of withstand all the different emotions. But it looks like this is more of a little bit of a clear breakout, and it's attracting a lot of attention. So you got Oscar right here up 15% of the day, and very nice for the people in retail that were in this one. Symbiotic as well. Don't know why this one's up 20%, but this one's up 20% as well. Got a lot of names that are just high flyers today. And then you get some, strong beta names like Robinhood benefiting as well, up about 4%. Where is Reddit? Reddit was at 143. Reddit's at 140. So Reddit holding a decent amount of its pump this morning. Again, if you are just joining, the Federal Reserve did not cut rates. They did not hike rates. They paused. They're projecting 2 rates in 2025 in terms of cuts, 1 in 2026 and 1 in 2027, which means by the end of 2027, 2.5 years from now, rates will be just 1% lower than they are today. I do not think the country is in a fiscal situation where we can continue to pay basically $1 trillion, about 1.2 trillion every year on our debt. It is kind of laughable to think that that's going to happen for the next couple of years, but that is what the summary of economic projections are projecting. And the question is going to be if that is how this ends up playing out. Now, look, I don't think the Fed needed to cut today. I definitely think the Fed can cut in September and things can be okay. But the dot plot that's showing that there's not going to be really any cuts in 2026 and any cuts in 2027 outside of one cut is just like, it's weird. It's weird to assume that's how they would do that. This is the dot plot right here. Again, that median projection really going hawkish for 2026, 2027. And I'm curious why. And we're going to see what Powell says today. How is the mic bad again? Dude, what is going on here? This is weird. This is being so. I feel like it should be good now. Let me know. I know I have one job. It's just being weird. Okay, it should be good. I don't know why it's happening. It's not my Mac. It's not my. It's definitely not my internet right here. Now it's better. Yeah, all plug it in and out. That's like, I'm not doing anything special. That's how you know it has to be with StreamYard, because plugging something in and out cannot be the reason why this is happening. Anyway, let's go to Powell. He's live. He should be live in just a minute.
They don't see it. I would say the man behind the curtain, but he just came around the curtain. Federal Reserve Chair Jerome Powell.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Colby. Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you ended a higher rate at 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that they do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. And that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very slow continued cooling, but nothing that's troubling at this time. But we watch it very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true? And how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place? So
this is very much the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect, if you see somebody writing down, a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point, it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick Tamarosa of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said that policy is in a good place and that it's modestly restrictive. given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not, we have to be forward looking. And the thing that every forecaster, every outside forecaster and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months. And we have to take that into account. So I think a backward looking look would lead you to a neutral stance, but we can't, we have to look at that. And because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass through of inflation and what's going to be the effects on spending and on hiring and all those things.
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about the outlook for the economy.
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned to right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
No answer.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market in the short
with
term?
what picking up?
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means like part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. Pardon me. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offered a really, it was a great conversation. number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which was a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be. We've learned that tariffs are going to be substantially larger than forecasters generally thought. And we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025. And that's a big part of the change. And that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. Best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now. And inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. Unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional, forecaster with adequate resources and forecasts for a living is forecasting pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs because someone has to pay for the tariffs. And it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately the cost of the tariff has to be paid. And some of it will fall on the end consumer. We know that because that's what businesses say. That's what the data say from past. So we know that's coming. And we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again. Right. So it's always forward looking. If at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad. Right. So we took very aggressive forward looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this and they understand how they're going to go. And it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Amara. Thank you. Amara Mokway with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said, no, and I sort of said as a pun, overworked, but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard. But I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it again respecting that we have critical missions to carry out. I've had a lot of experience in my prior careers, with headcount reductions and things like that. And this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. we're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Claire. And Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so, we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous. And so we actually, really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and that the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see, layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that, because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult. And it's so important that we get it right. I just would say it's not a place I would want to keep investing in that, for the good of the general public.
Victoria.
Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair. And I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that a new chair might want to come in and go in a completely different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who
No,
you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with AI will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. That, of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the dollar movements of the dollar was impacting the economy. Are we going through something like that now? That, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here, but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, but and it doesn't change our objectives or what we need to do. And, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be, there have been many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know though. But you're right. But honestly, Our focus is a much more practical one, and that is how do we keep inflation low and employment high in the near term. That's really what we're about.
Mark. Right.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack, really. I mean, at the margin, remember, you're at 4.2% unemployment. That was, for many, many years, that was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there's not a lot of layoffs, but there's not a lot of job creation. If you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very, very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. The U.S. economy has defied all kinds of forecasts for it to weaken really over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
All right, FOMC for the month of June is done. First of all, let me know if the audio is working. Yes. Audio should be good. I switched to a new mic. This is now beginning the market close, and we have a lot to analyze in terms of what Mr. Jerome Powell just said. You guys are saying Trump is live. I am getting some quotes from Trump. Yeah, he's live. All right. I guess we go to Trump. He's taking. Okay, so he's doing something sports related. I don't know if he's taking questions yet, but let's pull over to this. Let's see what he's doing, and if not, then we'll go back to him in a second.
You agree, Do you agree? No. Most of you agree.
President, have
No.
you been updated on that?
No, we're having a meeting in an hour. We have a meeting downstairs in 1 hour. Yeah.
Mr. President, on Iran, if regime change does happen there, if the regime falls, do you have a plan for what you think would happen
I
there?
have a plan for everything, but we'll see what happens. Got a ways to go. They should have made the deal. I had a great deal for them. They should have made that deal. 60 days, we talked about it, and in the end, they decided not to do it, and now they wish they did it. And they want to meet, but it's a little late to meet, but they want to meet, and they want to come to the White House. They'll even come to the White House. So we'll see. I may do that, but it's a shame could have been done the easy way.
Do you think the regime there could fall?
Sure, anything could happen, right? Of that, sure, that could happen. Yeah,
Mr.
please.
President, the Senate Judiciary Committee is holding a hearing on who exactly was running the White House under Joe Biden. Who do you think that was?
I think the auto pen ran the White House. We have an auto pen president before me. I think it's one of the greatest.
Okay, so we'll go back to him, but that was the main quote. And we kind of got that quote because these replays are always on delay from when they officially go live. And the main quote was Trump saying, "Hey, anything is possible with Iran. If they want to come to the White House, I'm open to getting them here." So I don't think we're going to get anything more from that. I'll go back to it in a little bit. But as of now, I think that's pretty much the main quote. Hoodie 78.63. So far, folks, the market's not really dumping. After Powell was, I guess, relatively hawkish, but I don't even want to say hawkish. I think he was just kind of, for lack of a better word, boring. Like there wasn't anything exciting that he said. And usually there's not something exciting, but there's nothing that I think the bulls or the bears could hold on to. It was really Powell himself admitting, hey, our rate cut projections aren't always accurate and you should take them with a grain of salt. And he quite literally said that the uncertainty means that you can't fully believe in the current projections, which means he's basically saying, hey, none of this might be true. I mean, that's essentially what he's saying. And so I think the market's kind of reacting to that by not really having a reaction to the downside right here. 79 on Robinhood. Resistance is 8,000 shares. Folks, we can get there. We can get there. 8,000 shares on Hood at 79. There is a shot. And then who knows? Maybe we push 80 today. I don't want to get too greedy, but maybe there's a shot if we get the volume. Palantir 139. That's up about 1%. Tessie 323. That's up 2%. It is down from 329 earlier in the day. Nvidia has been pretty much flat between 140 and 145 for the past couple of weeks now, basically ever since earnings. And eventually it's going to make a move to the downside or the upside. But Nvidia right here, 144.69. SoFi, great day, 1539, even with the expectation of no rate cuts. Or at least of less rate cuts over the past couple over the coming years, but at least 2 rate cuts this year. I guess that's enough to pump SoFi. SoFi up 6%, 6.5% on the day, potentially based on those rate cuts coming out. PayPal's down, which is weird. And maybe it's because Circle is pumping like crazy, and PayPal does have a competing stablecoin. Circle right here, 30% on the day, 194.74 on Circle. That one is also hurting Visa, which, by the way, dude, I get it that Visa's down because stablecoins could be an existential threat to their business, but so far, stablecoins have not had any threat on their business. I think I'm not really buying the dip because I don't understand the company that well, but it is one of those things where I think they're going to have a quarter where they have phenomenal results because nothing's really changed in the business, but the narrative around stablecoins could be taking them down, but the narrative is not reality yet. Now, could that be in the future? Sure. But Visa right here down basically 10% on the week based on what's going on with stablecoins. PayPal is down because Coinbase announced a payment platform. Okay, so that's what Coinbase announced today. I forgot. I was trying to think what Coinbase did. I saw a little bit of the headlines. Coinbase, 16.2%. Actually, I think I have a video of Brian Armstrong explaining this payment platform, but I guess it's pretty bullish, or at least the market's interpreting it as bullish. Here's a minute of Coinbase CEO explaining this new platform.
Coinbase is coming into payments in a big way. And for years, we've been working on the building blocks here of having a stable coin that's trusted and regulated with USDC, with a more scalable blockchain like Base. Toby Lutke at Shopify and we would meet and we'd think about, okay, how can we get this ready for prime time? And some of those pieces fell into place with a trusted stablecoin, a scalable crypto network. But the last piece that we really had to build was actually a new smart contract that replicated some of the functionality of credit cards that people use in e-commerce. So people don't realize this often, but when you go pay for something in e-commerce, the merchant does what's called an authorization on your card, but they don't actually capture the funds until they reserve the inventory and they calculate taxes. They have to figure out shipping. And so credit cards have this kind of off, capture, void, refund functionality. And with Shopify and Coinbase, we actually were able to replicate that in a smart contract on chain. It's open source. And so people have been talking about the programmable money that crypto can bring for years, and it's now finally ready.
That is a big deal if you are bullish crypto or just bullish the broader decentralized finance ecosystem. And Coinbase right here up about 15%. I mean, the implications of that in terms of its profits, revenues, et cetera, that's yet to be seen. But the idea that now Trump has let the floodgates open in regards to crypto innovation, because there is no Gary Gensler that's going to stop people from actually trying, Brian Armstrong, Vlad Tenev, they don't need permission for this. That is probably why the stock is getting some momentum. I think we have Trump commenting on Iran, Israel, and some trade deals. So let's go back to that real quick, and then we'll keep going from there.
Yeah, Mr. President, in your meeting today with the Chief of Staff of the Pakistani Army, did you talk about Iran? Did that come up? Is there anything you can share from that meeting?
Yeah, well, they know Iran very well, better than most. And they're not happy about anything. It's not that they're bad with Israel. They know them both, actually, but they probably, maybe they know Iran better. But they see what's going on, and he agreed with me. Reason I had him here, I wanted to thank him for not going into the war, just, ending the war. And I want to thank, as you know, Prime Minister Modi just left, just a little while ago, just left. And we're working a trade deal with India. We're working a trade deal with Pakistan. And they were both here. But I was with Modi a few weeks ago. He was here, actually. But now we speak to him. And I'm so happy. There was a deal that two smart people, plus, they have people on their staff too, but two very smart people decided not to keep going with that war. That could have been a nuclear war. Those are two nuclear powers, big ones, big nuclear powers. And they decided that. So I was honored to meet him today.
And Councilor Eva, sir, and for anyone who may want to answer, how has the travel bans from certain countries affected fans maybe coming in for the games, or is that not a consideration?
Johnny, go ahead.
Yeah, no things that we have this year with the Club World Cup, which is
Friends, they heard about this meeting.
But worry about the potential for retaliation here at home.
Yeah, well, I don't want to get involved either, but I've been saying for 20 years, maybe longer, that Iran cannot have a nuclear weapon. I've been saying it for a long time. And I think they were a few weeks away from having one. And they had to sign a document. I think they wish they signed it now. It was a fair deal. And now it's a harder thing to sign, It's a lot of water over the dam. But, it's I say it very simply. Iran can't have a nuclear weapon. Too much devastation. And they'd use it. I believe they'd use it. Others won't use it, but I believe they'd use it. So that's it. It's very simple as far as I'm concerned. They can't have a nuclear weapon.
And then domestically, Missouri Senator Josh Hawley came out this week as the lead sponsor of the bill to raise the federal minimum wage to $15 an hour.
Okay, cool. So we got, again, some more updates. Trump basically saying what he's been saying, Robin at 7830, that Iran cannot have a nuclear weapon. Now, the Iran supreme leader had some tweets out today. He said the U.S. entering in this matter is 100% to its own detriment. The damage it will suffer will be far greater than any harm that Iran can encounter. And then he said the harm the U.S. will suffer will definitely be irreparable if they, I was about to say irreparable, dude. You guys are about to get me on that. Irreparable if they enter this conflict militarily. Then he says it isn't wise to tell the Iranian nation to surrender. What should the Iranian nation surrender to? We will never surrender in response to the attacks of anyone. This is the logic of the Iranian nation. This is the spirit of the Iranian nation. I think this guy is talking to talk at this point. I mean, this is the type of guy who's 5'7" and says he's 6'1" on his Tinder bio. I mean, this is it's just talking to talk at this point. Like, you're trying, like, no, dude. The U.S. entering into this war will hurt them more than Iran. No, it's not. No, it's not. I mean, if we get into a war, I will take the U.S. military over the Iranian military any day of the week. I don't want to get into war, and I don't think Iran wants to get into a war, but they're just trying to act tough at this point. Like, you can act tough all you want. You can act like you're 6'1", but when you go on a date and you're 5'7", you're not 6'1" anymore. Now, if your personality is as big as it, then maybe that can extrapolate you to feel like you're 6'1". But if you're not 6'1", you're not 6'1". Iran does not have a military that is even 1/10 the size in quality or quantity to the United States. It's just that simple. So I think he's just talking to try to get a message out there to whatever Iranian citizens that agree with the regime and want the regime to be successful. But it's just talking to talk. It's not real. Now, granted, based on how Trump is so nonchalantly talking about the conflict, saying that he would invite them to the White House if they wanted to, which is one of the quotes we just got this morning. He was talking about them very freely when they were raising the flag at the White House. I mean, it kind of feels like the escalation to an extent, or the conflict to an extent, is not escalating, but no one really knows. And they already exchanged missiles last night. The missiles were not like, Iran said it would be the worst surprise that Israel has ever seen on its soil. That was not the case. Like it was some missiles that landed, but it wasn't like the craziest thing ever. So I think at this point he is talking to try to save face, but it's not necessarily going to lead to any momentum. At least that's not what it feels like. And the reason I said 5'7" versus 6'1" is because I am 5'7", and I really wish, dude, if I was 6'1", I think I would take over the planet. If I was even 5'10", I would take over the planet. But your boy got 5'7". Your boy got 5'7". Now my personality is like 6'7", but unfortunately the height is 5'7". But it is what it is. Nonetheless, you can't lie and say that you're 6'7" when you're not. And I think that's what Iran is trying to do right now. Pounds right here, 139. Robin at 78.38. Circle, are we still pumping on this bad boy? 194.75, up 30% on the day. It's pretty incredible. Pretty freaking incredible. This thing, I mean, dude, does Circle deserve to be worth $42 billion? I don't know. And majority of the revenue comes from Treasury interest revenue, which is going to get cut. Jay Powell said 2 times this year. Hopefully they do that. And even if they don't cut in 2026, 2027, that is going to be a 50 basis point reduction on all the interest Circle can get. And they're sharing a decent chunk of that with Coinbase. So unless they completely take all the market share from Tether, which is possible because people don't like Tether as much, but if that doesn't happen, I don't know if Circle becomes the de facto stablecoin. And even if they do become the de facto stablecoin, are they worth $42 billion? I think that's the broader question. I'm going to try to do a deep dive on Circle and try to get some people who are experts in the stablecoin space. And Tanner, Roy, and I kind of talked about it already on Monday, and they both agreed the valuation was a bit aggressive, but that's what we got on Circle. Archer right here, 1019. That's up about 2.7%. GameStop's up about 3%. Rocket Lab up 5% on the day. ASTS, is that still at 43? That is at 44.50. Wow. Basically all-time highs on ASTS. Someone said you're 6'1" in our hearts, Amit. I appreciate that. I am at least I'm 6'1" in your hearts. I appreciate it. All of you guys are saying you're tall in the chat. I don't know, bro. A lot of you guys might be capping right. Everyone's saying they're 5'11" right now. Pound cheer 139.19. Robin again 78.35, and then again ASTS right here is getting some momentum. 44.50 on the day. Okay, we got Besant, who is talking about crypto. He just did a new podcast. Here's what he had to say. This also could be pumping Coinbase and Circle on the day.
There's a new book called King Dollar. A journalist who's followed Treasury for about 40 years.
Yeah.
And he talks about every time there was a narrative that the U.S. was going to lose reserve currency status, why it's never happened.
Mm-hmm.
And
because crypto, that seems to be a threat to the dollar, doesn't it?
I think it's the opposite.
Oh, really?
I think stable coins could reinforce dollar supremacy, because with stable coins could end up being one of the largest buyers of U.S. treasuries or T-bills.
Mm-hmm.
So all of a sudden, if you are using a stable coin in Nigeria that's backed by the U.S. dollar, you don't actually have to have dollars. It's on your phone. You can transact. So I think there's a very good chance that crypto is actually one of the things that locks in dollar supremacy.
And is that why it was crucial that Donald Trump get involved in crypto rather than trying to constrain it like Joe Biden was?
I think constrain's too mild a word. I think make it extinct.
Oh.
So this administration's commitment to digital assets, it's innovation, because there's so many other things that happen around digital assets. And also, it's one of those things that it's one of the most important phenomena that's happening in the world, and the U.S. just ignored it.
Look, he's right. I unequivocally agree with him. I mean, he's right. We cannot, by the way, ASTS 4460, we cannot ignore what is happening in crypto. And it's a good thing that we're not doing that. And that's really bullish for Hoodie, really bullish for Coinbase, given the Treasury Secretary speaking so highly of stablecoins. Obviously, that from a narrative perspective, that's great for something like Circle. And it's going to lead to more momentum. Now, Bitcoin itself has not really seen that much momentum. By the way, we'll talk about more about what Powell said in a second. Bitcoin right here, 104. Interestingly enough, Bitcoin really didn't make a move off Coinbase introducing this new crypto payment platform and the Treasury Secretary basically giving a ringing endorsement to the concept of crypto itself, but still above that $100,000 level. It was also refreshing for him to say that the dollar is not going to be threatened as the world's reserve currency. I mean, that's the classic argument you've heard from all the bureaucrats over the past decade, is that if we elevate Bitcoin or crypto to any level of meaningful status in society, then the dollar will be weakened. And like, that's not really true. I mean, and the simple argument right there is that for stablecoin to back up those stablecoins, they have to be pegged 1-to-1 with the dollar, which means you have to buy treasuries, which is great for the dollar. It means we continue to be the world's reserve currency. So I think Besant's thinking of it very logically. And he's like, there's no reason why we should be afraid of this. If anything, it's going to lead to more innovation, more companies doing more interesting things that could lead to more businesses, that could lead to more tax revenue. And more importantly, it could lead to treasury demand, which is the most important to get the long end of the yield curve to start coming down. Robinhood right here, 78.45 currently right now. Lemonade, this is another one I'll be doing a deep dive on probably next week. We're going to do Oscar tomorrow night, 9 p.m. Eastern. Lemonade up 7% of the day. Lemonade also in the insurance business. The way I've been explained Oscar today by a couple different people. So I got two explanations. Oscar right here, 14%. Steve told me it's Robinhood for insurance, meaning a lot of cash, small market cap, right? An industry that's ripe for disruption. And then someone else told me it's a baby UNH. It's a baby UNH. So it reminds them of United Healthcare 30 years ago. United Healthcare basically flat on the day. I think those are two pretty exciting philosophies, if that's the investment thesis. One is a baby Robinhood that's a disruptor. The other one is a small compounder that is going to have massive free cash flows in the future. The big risk here is if the Republicans repeal the Affordable Care Act, or if they gut some of the core elements of the Affordable Care Act. And that's another reason it's a little scary buying into. It's like, you just don't know, right? Like, I think you need to know a little bit more of the internal dynamics of that Affordable Care Act if it's like a real long-term investment. Like, you should probably be able to explain what exactly would need to leave the ACA that could be a tangible impact on Oscar's business to the downside. And I can't explain that because I've not done the level of due diligence yet. But one could also argue that it's a tailwind because if people get off of the Affordable Care Act, they have to go to different private insurance providers like Oscar Health. Now, granted, Oscar gets a lot of money from the Affordable Care Act, so there's a nuance there. But it is a little bit more of a complicated thesis from that regard, on that being the bear case, which seemingly is the only major bear case. And tomorrow night we'll talk more and try to go deeper and understand what that means. But yeah, that'll be the first deep dive tomorrow, and then Lemonade we'll do next week as well. SoFi 1537. Let me check resistance at 16 on SoFi. It has been a long time since we've seen 16 on SoFi. How long? I think it's been since January, right? Last time, no, February, just around February, in the middle of February is where we saw 16. Resistance right here. Let me know if anyone's been buying SoFi over the past couple of weeks. I think there's a couple of you in the chat that in the low 13s, you were a bit more aggressively slamming the buy button. 16 has 160,000 shares. 160,000 shares on Circle, or not on Circle, on SoFi. SoFi right here, 1539 currently at the moment. Grab is stuck at 465. That's correct. Again, there is some bearish option flow. There was a trader who spent $500K in premiums buying 450 puts for July 18th, and he paid above the ask price, which means he wanted to get them filled. That could be a hedge, or that could be he thinks it's going below 450. So although we did see the 41 million shares yesterday on the dark pool, there is some, which we don't know is bearish or bullish because it could be a buy, it could be a sell. Today was objectively, unless it's a hedge, bearish option flow. And so that's one thing to consider when looking at Grab as well. ASTS, again, still having some momentum. Visa, I don't really think this business deserves to be down as much as it's down because of stablecoins. I think their core revenues, free cash flows, net income margins, all of that's going to be the same for the next few quarters. Now, if they lower guidance, this thing's falling off a cliff. If Visa says, hey, we think stablecoins are going to materially affect our bottom line for 2025, yeah, this one's going to get hit. Now, granted, Visa's an incredible company. It's not going out of business or anything, but the narrative already is so ugly in the context of what stablecoins could do to a Visa or MasterCard. If they confirm it with actual numbers, that wouldn't be the best. So that's one thing we definitely have to look at. VG as well. Shout out to Chris and Matt. VG up about 1% of the day. I think at one point it hit 1834. So not a bad day for VG. Okay, so let's talk more about what Jerome Powell actually said. So here's some quotes that I want to read based on what Powell said. Number one, he said the labor market's not crying out for a rate cut. You talk to business people right now, there's a very different feeling now that people are working their way through this. It feels more positive than it did 3 months ago. So basically saying, hey, the labor market is stable. Non-farm payrolls is on his side, by the way. We keep beating every single month, which Trump takes credit for. But at the same time, when Trump's taking credit for that, Jay Powell looks him in the face and says, well, why do you want me to cut? If everyone has a job, or if everyone's getting a job, then why are you telling me to cut? So that is one thing that makes it harder for the Fed to justify cutting. Then he says policy is not very restrictive. Policy is now modestly restrictive. He also said today we talked at a high level about improving communications, including changes to the SEP. In the fall, we will talk more about the details on the changes to communications. And then he says labor supply is diminishing with less immigration, which theoretically also could mean that there's more jobs for Americans, even if, that has different inflationary impacts. Now, one of the things he said right here that kind of just, I think everyone looked at and they were like, all right, whatever, is he said, with uncertainty as elevated as it is, uncertainty primarily, he's referring to tariffs, no one holds these rate paths with a lot of conviction, even though 7 out of the 19 of the participants who voted today said that they want 0 cuts in 2025. So this is the nuance here that we're dealing with the Fed. And I think there's a couple of ways to think about this. Number one, you could essentially think Jay Powell and the Fed are bluffing, which again, he literally told you we could be bluffing. Again, he framed it as data dependent as he always does, but like they could just be bluffing. This whole 1 cut in 26, 1 cut in 27. I mean, if we have a recession, it's not going to be 1 cut in 26, 27. And if we have inflation that meaningfully does fall to that 2% target, right now it's at 2.4, super core PCE already negative for the first time since 2020, then you would imagine they like realize it's time to cut. By the way, Jay Powell could also, he's going to get fired in May of 2026. So no matter what, you're going to get some level of a succession for Jay Powell, whether that's going to be Kevin Warsh or whoever it may be. It's going to be someone who's more friendlier to rate cuts. So I don't think the 1 cut in 2026 makes sense, but you could just say that Jay Powell's bluffing and that there is no reason to uniquely feel so hawkish or restrictive on policy right now, even with the labor market being the way it is. The other argument you could go for is the political argument. Right? The political argument being like, hey, Jay Powell, and he didn't really take the bait when he was asked about Trump today, but Jay Powell really doesn't like Trump. And as a result, he's not cutting, even though the data is so obvious that he needs to cut because of Trump. I think there is merit to that argument. However, I also think with the labor market being as strong as it is, with oil spiking 15% over the past week, and with, tariff uncertainty still being there. Do I think that's the best argument? No, but that is a argument that, we don't have a deal yet with China. We don't have a deal yet with India. We don't have any deal with South Korea. Like we still don't have these deals that are supposed to be reducing the average tariff rate, which would then reduce the expectation for inflation. He can point to those things logically and say, hey, I can't cut. Now, we may all disagree with it, but it's not like, oh my goodness, I just hate Trump. Now, that might be embedded inside of it, but there are logical elements to why he's not cutting. And until those change, which hopefully in the summer, Trump will have enough time to get those trade deals done, the 10-year right here at 4.391, that would lead to him having the freedom in September to then give us those cuts. But ultimately, we're going to have to see over the coming months how that plays out. Again, on Robin at 79 only has 8,000 shares. There's only 8,000 shares waiting on 79. So there is a shot that we can get there. Also, we're not at all-time highs. All-time high is 85. I know everyone's saying all-time highs, but technically all-time high is 85. We were there in 2021 for like a day. But this is 52-week highs, which is nice for HUD. What do you think about this market with the Fed update? Is it going to dump or pump? Well, I asked the poll in the chat, and let's see what you guys said. I believe most of you said pump, or was it 50-50? Literally 50-50. On 4,000 votes, it's literally 50-50. So in the morning, I said pump because I felt that in general, there is enough hawkishness to the point embedded already in his rhetoric, basically over the past couple of weeks, in regards to how he's thinking about inflation in the labor market, that he wouldn't be that much more hawkish today. And quite frankly, he wasn't, which is why I think the markets are slightly up right now on individual stocks. Now, was he hawkish in certain scenarios? Yes. But was it like straight up, hey, like this economy is horrible and we can't justify cutting rates ever, yada, yada? No, it was more so just him kind of saying he was data dependent. So quite frankly, it's not even a pump or dump. I mean, if you're talking about the S&P as the quote unquote market, it's flat. It's up 0.18%. So that's not a dump. That's definitely not a pump. Certain stocks are pumping, but essentially market stayed flat based on what Mr. J. Powell said. Yeah, flat is the real answer here. ASTS, are we at all-time highs? We're at 44.50, 44.65, folks. That is all-time highs on ASTS. Where's CoreWeave? This thing, was it having fun today? Yeah, basically all-time highs. 173. It was at 176 in the morning, and then Circle continue 197, dude. Oh my goodness. This dude, like if you chase Circle at even 130, which is a 3x after IPO, you are still up because it's at 190. Just incredible. Just an incredible day. What about Quantum? QBTS, that one. They got upgraded to $20 today by another firm. So they are getting some love on the street. Coinbase, again, trying to go for 300 based on that new crypto platform. AMD, 126. AMD basically flat. Roblox, 102. Tesla Robotaxi should be starting in a couple days. Waymo, big news for the entire industry. Waymo is now coming to New York. By the way, Jay Powell is testifying on the Senate panel on June 25th. June 25th, Jay Powell is going to be testifying. That just came out right now. So we will get to see him interact with Elizabeth Warren in a very friendly way. So there you go. That's what we got on Powell. And then again, Waymo, you do have New York. So they put this out today. It's not going to be fully unsupervised. There's going to be some drivers in the car, and there's going to be a limited amount. But you got robotaxis coming to New York City. Fartcoin update. That's a good idea. We haven't looked at this. Fartcoin 237. Still $1 billion market cap, but down about 3% of the day. What is the short float on SoFi? I forgot. I think it's still 13 or 15% because that could get a little squeezy. Yeah, 13%. SoFi, do we end above 1550? It's 1539. Again, 16 has about 160,000 shares waiting as well. The big winner of the day, though, is Oscar. Put in the chat if you're an Oscar. Put in the chat. Put in the chat if you bought today, if you bought yesterday. Dude, it was 2 a.m. last night. I had my finger on the trigger to buy 1,000 shares at 1630. Like I really did. And then I told myself, I just don't know enough about it yet. I really was going to buy 1,000 shares. And I was like, I just don't know, dude. I really just don't know enough about it yet. And I just, the I guess call it conservative side of me was like, just like I should chill out a little bit. But if I did, I would have been up a lot today. I mean, this is a pretty incredible move. Now, granted, Oscar is just reaching its 52-week highs because it was at these levels back in February, as you can see right here. Just above those levels. It was at 1848. Right now it's 1873. Back in May. In February, it was around that 1650 range. So if it really does stay above this level, I mean, you got clear skies probably into the 20s, but it's got to hold up these levels at this point. And now you just have a lot of retail coming in as well. Artem said, I got calls this morning. Bought Oscar after listening to Chris last night. Yeah, Chris bought Oscar last night. So that's doing well for him. Circle is today's winner as well. That's fair. You know what Oscar reminds me of? Wasn't the shark's name in that movie Oscar? It was the movie called Shark Tank? No, it wasn't called Shark. What was the movie with the shark? You guys know what I'm talking about, right? NVIDIA 145. What was that freaking movie? It was in the ocean, bro. You guys know Shark Tales, right? Hold on. Shark Tales? Yeah, Shark Tale. Wasn't the guy's name Oscar? Yeah, the guy's name was Oscar. I was right. It was Will Smith. I knew it was one of these movies. See, I have a pretty good memory when it comes to movies, bro. I'm a movie connoisseur here. Shark Tale. I haven't watched that movie in like a decade, but it's not Nemo. Okay. If I said Nemo, you could have made fun of me. I didn't say Nemo because I knew it wasn't Nemo. Okay. If I said Nemo, I would have given you guys the chance to make fun of me. I would have took it like a man, but I did not say Nemo because even I have a little bit of culture. Robin at 78.37, Pouncher 139, 78 Pouncher again up 1% of the day. Grab 465, S&P basically flat at 597. My son loves that movie. Yeah, dude, I haven't seen it in a minute. And I would want to watch that movie again. Apple 196. Apple right here. is flat. Bought it because you mentioned it. Well, congrats. I should have bought it too. It was so funny with Steve today, bro. He called me. I was like, so congrats, Oscar. He was like, don't congratulate me. I was like, what are you talking about? He's like, I didn't buy it. I was like, goodness, bro. I'm not the one who wrote the freaking Seeking Alpha article. Like, he did all this DD and then he doesn't buy it. Steve's risk tolerance is just different. He's such a smart stock picker. Like, he doesn't get all of them right, but he really does know how to analyze companies. And he's one of the people I trust when he brings up a name and he gets interested in it. But his risk tolerance is just different. You know, he's at a different stage of his life. So he's not going to buy every stock he writes about. But he's, you know, past couple of weeks, Oracle, Elf, Oscar, been some good names. Some very good names. Such red on Amazon and Google. Honestly, dude, I think markets are I mean, it's not real red. It's like barely down 1%, but I think there's a little bit of a rotation out of big tech into some of these speculative names today. Honestly, that's what I feel is kind of going on. And again, down 1%, Amazon, Google is not that crazy, but where's the money coming from for a Circle or an Oscar? It's got to be coming from somewhere. It's either coming out of money market funds or people are taking profits on other stuff and they're pumping it into these new names. So it could be a little bit of a rotation. Yes, the stock market is closed tomorrow. So in 7 minutes, when the market closes, we are closed for the next 48 hours. I'm putting Steve's handle right here in the chat for those that want to follow him on Twitter. And then I'll be back on Friday, which means if you have options, you just have to remember that the market's closed tomorrow. Circle right here, 32%, but we will do a deep dive tomorrow. So we will have a stream tomorrow, 9 p.m. We will do a deep dive. Circle right here, 197. Yo, who's in Circle? Put in the chat. Put your average also. Put in the chat if you got in on IPO, if you got in after IPO. I think the lowest I saw this was like $85. I was at AIPCon when it went public, and I just looked at my phone during the conference, and I was like, goodness, dude, 85. And if I had it, I would have sold. I can't even feel bad about this. I would have sold. If I had gotten an allocation, I would have been out at 85. I would not have held to 197. There's no way. There's no way that would have been the case. I bought Circle at 80. Circle average 31. All right. You got the IPO. Circle 198 right here. Circle 36, 91, 48. Yo, you guys are a bunch of degens buying Circle, bro. Goodness gracious. You guys loaded up on this. Well, it's worked. And the thesis is, what's the thesis? Stablecoin, right? That's it. Stablecoin. Because I don't think you get to 42 billion with any numbers. I think the thesis is literally just like, hey, the Senate's about to pass the stablecoin bill. This is the narrative. This is the momentum. You buy. Robinhood right here, 78.44. We got 5 minutes until the close. Palantir 140 as we get into the close. Nvidia 145. Nubank 1228. We'll look at all the ETFs once the market closes, and we'll see who's in the lead. Lyft 14.7. I think Matt has Oscar, by the way. Matt has Oscar and ASTS. So Matt looks like he's running away with the lead right now. And I would imagine his portfolio is doing very well. Yeah, forget the PE ratio, dude. This is like, but you know, to be honest, there is a type of investing that is based on momentum, and that's okay. You know, if the Senate, like, at the end of the day, we're here to make money. If the Senate is voting on a stablecoin bill that's going to affect Circle, and you think that's going to have a positive effect on any company that's associated in that space, and you want to buy that company based on that reason, that's fine. The problem here is it an investment or is it a trade? And then more importantly, do you have an exit strategy? Because entry price does matter, right? Of course, you can always DCA, but if the thing falls back to 40, it's going to be hard DCAing from 190 to 40. And then the question just becomes, how long do you want to hold on to it? But if you want to play it that way, I mean, a lot of stocks run on momentum, and it's totally fine to kind of do a cash grab from that perspective. S&P 597 just going red right here, basically flat. SoFi, it looks like we are going to get a $15 close. And then Tessie right here, 322. Currently right now. Microsoft prepared to walk away from high-stakes OpenAI talks. Wow. Okay, so we know the OpenAI saga that's going on over the past couple of days. Sam Altman basically wants to kick off Microsoft from owning a future share of their profits. He wants them to own 30% of a new entity. I don't even know what that means, because you got the nonprofit, you have the for-profit. Now you have some new quote-unquote reshaped unit is what they're calling it. But I don't know how Microsoft's going to react to that. Also, we got another update today from Microsoft they are, I think I put in the chat when Powell was speaking. Yeah, they're planning thousands more job cuts aimed at salespeople. Thousands of more job cuts aimed at salespeople. Microsoft would rely on its existing commercial contract to retain access to OpenAI's technology until 2030. Okay, that's Nadella saying, hey, buddy, we own 51%. And we're going to keep owning 51% or 49%, whatever it is. But they own a lot. And the information reported 2 nights ago that Sam Altman only wants them to own a third and to forego their future profits. Nadella probably is on the phone with all of his $5,000 an hour lawyers trying to figure out how that never happens. So that's going to be a little bit of a interesting saga that we see play out in regards to OpenAI. But again, this headline right here, Microsoft planning thousands more job cuts aimed at salespeople. Basically, one could argue again that they figured out AI can be a better salesperson, theoretically, than an actual salesperson, or they're seeing less demand and they're firing employees, which is not good for the economy. So there's 2 ways to interpret that headline. Either you think AI is replacing salespeople, or you think that Microsoft just doesn't need a lot of salespeople, which is, maybe not the best. But Microsoft, on the news of cutting labor, that usually tends to get a stock higher because there's going to be less costs associated. So margins theoretically have a chance to go up. 480 all-time highs right here on Microsoft. Why are you guys saying Google's crashing? What do you mean Google's crashing? Okay, it is, I guess, 2% down on Google is crashing. I don't think there's any news on Google. We got 2 minutes until the market closes. Wait, is Google down based on the Microsoft news? Why would Google be down based on the Microsoft news? You think that could happen? Circle's 220? My goodness, bro. Holy guacamole. 34%. 34% on Circle. Bro, that's a little aggressive. A little aggressive, but nonetheless, that's what you got on Circle. My goodness, 199.65. We got the market closing in about 30 seconds. Robinhood right here, 78.32. I'll try to get some more updates on Google. Not sure why the Microsoft thing would take them down 1.5%. But that is what we're seeing right here. Palantir 139, Tesla 321, Hoodie 78.30. The market is not open tomorrow. It's not open tomorrow. Yeah, Coinbase also has a good stake in Circle. That could be another reason why Coinbase is getting some love today outside of the new platform they introduced. They have a big stake in Circle as well, which can help them generate some more equity from the balance sheet. All right, folks, here we go. Wednesday, June 18th. Thank everybody for being here. FOMC day is over. The stock market is now closed. Today my grandmother actually asked me for the first time, why do I ring the bell? Like today for the first time I came downstairs and she's like, I've been meaning to ask you every day, but like, why do you ring that bell? And I was like, I don't know how to explain this. I was like, well, when the market opens, like we ring the bell to commemorate it. And she was like, what are you talking about? I was like, I don't really know how to explain it, but like we do it every day. So today was the first day I actually explained to her why we ring the bell. Robinhood, 78.40, up 4.6% on the close. Dude, you can't be that upset. We got a $78 close. Last time we were anywhere near these levels was on S&P Inclusion Day. Very nice to see Robinhood holding that momentum. Palantir, 139.80, Tessie 322, Nvidia 145, PayPal down 3% of the day based on what Coinbase introduced. SoFi 1538, nice day for SoFi, up about 7%, closing above that $15 range. Grab down about 3% of the day, 465, S&P 500 598, basically flat. Google down 1.4, a little bit of a green candle after hours, but still down on the day. Amazon as well, down about 1%. Meta 695, down about 0.23. Salesforce down 1%. Elf down 2.65%. TFC 39.81. Enphase was up 4% after falling 30% yesterday. Palo Alto Networks flat on the day. Archer up about 2.7% after falling 15% from their convertible note offering to the tune of $850 million. The VIX was down about 7% on the day. Home Depot down. Iran down. Cisco up about 1%. AppLovin, another bad day for AppLovin, dude, down 4%. This one just got demolished ever since they didn't get into the S&P 500. That could have been Hood. That could have happened to Hood. AppLovin was basically 415 at the height of it. Now back to 345. And unless there's any fundamental reason, I think there was some short report, but besides that, a lot of it seemed like speculation on getting into the S&P 500. VG, great day, 1820 up 2.7%. ASTS, also incredible day, up 10.85% on the day. Oscar, great day as well, 16.5%, 1877. We'll be doing a deep dive tomorrow, 9 p.m. Eastern on the channel, and try to go deeper into Oscar. Rocket Lab, great day, up 5.4%. And then you had Circle, which completely took the trophy today, 202, up 36%. It's still moving after hours, folks. I think it was 200 at the close. We're at 202 currently right now. Just incredible. Just freaking incredible. So congrats if you're in Circle. This one is up 36% and definitely helping Coinbase as well. Coinbase did it end up 20%. Coinbase up 17. 297 right here on Coinbase. So there you go. What a day, bro. What a day. Why is it pumping so hard? I have no idea. I have no idea why it's pumping so hard, but it is pumping. Now, Sam is going to be joining us in 15 minutes. You guys know Sam. He gave us the Nebius thesis, which was down today. Or actually, it's up. It was flat. It was, at one point, it was down like 2%. He'll be on in about 10 minutes, and we'll get his thoughts on what's going on in the broader markets. And then we will be done for the day. No earnings today. Not any earnings that I'm seeing right now. No earnings really until July 11th. So we have about a month where we can chill out before we get back into earnings. But then we'll be into it. Your grandma definitely thinks you just talking to the TV all day. No chance she has any understanding of what you do. Well, she knows, like my mom's explained it to her that like I do YouTube and stuff like that. And I talk about the market. So I think at a high level, she kind of understands it. But yeah, in terms of the actual stock market itself, she's not, obviously she doesn't care that much about it. But today was the first day she finally asked, why do I ring the bell? Because I was wondering, like I ring it pretty loud every day, twice a day, and they're downstairs and they hear me. And she's never asked, but today she was like, so what's the point of that bell? What's going on? And so today I told her. Do you want to do year to dates? You want to do year to dates? All right, let's do year to dates in the chat. Let's do year to date. I'm at 46.3, pretty much the same as it was. I think we did this 2 days ago. It was at 47. So not that big of a change since 2 days ago. Micron reports on the 25th. Okay, I did not know that. All right, so we'll keep eyes on Micron. And let's go to everyone's portfolio. Micron right here up 1.3% of the day. All right, so let me refresh. Let's see everyone's portfolio. Is this accurate? Let me make sure. Yes. All right, here we go. So I am down 0.58% all time. Steve is down 0.35%. Tanner's down 0.53%. Matt's up basically 5%. Chris is up 0.37%. So I'm dead last right now. Tanner's fourth. Steve's third. Chris is second. And then Matt is just running away. Running away with this competition. Up 4.84%. Oh, I forgot Matt has SoFi too. Matt has SoFi, Rocket Lab, ASTS, and Oscar. Look at Oscar. It's up 25% since he picked it. So he's got a hell of a lead right here. The only one he's down on is Amazon, which is a nothing burger, and then Dutch Bros. He's even up on AB. I forgot ABCL was up 10% today. I forgot about that. So he did go a little bit more risk on, but it's working. And, you know, it's leading to more momentum. In terms of Steve is down on Netflix, Salesforce, Micron, and PayPal. PayPal's the worst, down about 5%. MicroStrategy's down 3.4%. Tanner's down the worst on AppLovin. He's up the most on Coinbase. And the rest of them are just like negative 2% across the board. Chris is up the most on Marvell. I forgot he had that one. Cisco, and he's down the worst on Novo Nordisk, which is not that bad. So this is for since Monday. We're tracking it since Monday. So it's not year to date. It's just tracking it since Monday. Yeah, I mean you guys might have voted it right. You guys might have voted it right. All right, let's see what you got in the chat. We got 10%, 30%, 14%. The starting date for the competition again was on Monday. Monday prices. We got 42% here. Joseph's up 80%. 22%, 27%, 70% all Nebius. I love it. Not too bad. It does count dividends. Yes, Steve has it counting dividends as well. We got 43%, 50%, 9.2%, 56%, 72, 28. Yeah, pretty much everyone. 10%, 30. I would say everyone's averaging from like 10 to 40. That's the number that I'm seeing across the board. Look, it seems like we're pretty much all green. I mean, if you're a little bit heavy in some of these names that haven't really taken off this year, you're a bit red, but it's not like you're down 30, 40, 50% like April was for most people, which is not too bad. Robinhood right here, 78.51 currently after hours. Okay, so there have been some pretty aggressive call spikes on NVIDIA. Dude, the contract I was looking at yesterday in the option flow was NVIDIA 150 call had like 50,000 in volume. And then today, NVIDIA, the 145 call had 122,000 in volume with an open interest of 129,000. So you got a lot of these NVIDIA's 150s and 145s for this month and for next month, getting a ton of premium. And you got traders betting that we're hitting all-time highs pretty soon. At least that's what the option market is suggesting. NVIDIA right here, 145, grab 467, S&P 597. Also, remember BlackBerry? I know a lot of people were thinking about that one this year. I have a friend on X. Her name is Lee, and we both, I believe she's from Singapore, actually. We both were in Palantir at $7. And one of her big picks this year was BlackBerry. One of the big picks I had was Grab. And I was talking to her today. I was like, dude, isn't it so funny? Like both of us are like, all right, BlackBerry and Grab. This is what we got this year. And then every other retail stock, like freaking Oscar, Circle, all these names are running like crazy. And Grab and BlackBerry have stayed basically at the same price all year. And so it's hilarious because we went through this with Palantir. Like you had a thesis, you believed it was undervalued, you were waiting for the rest of the world to catch up. And then eventually, you know, if you're right, it pays off. Now it's more fun if you kind of go through these dog days, because if you are right, then you have to go through the shit to get there. But it is tough seeing everything run up, you know, and your pick that you think from a fundamental perspective makes sense is stuck. But nonetheless, that's how the markets work. And it's just a question of how much patience do you have to withstand that. Palantir right here, 139.81 again. Robin at 78.64. 79 after hours could happen. If there's any bit of news that's positive, especially because there's not a ton of resistance. But 78.64 is where we ended on the day. Let's get a little bit more coverage from what the Fed said and what Powell did. And then we'll get Sam on in about 5 minutes and we'll keep going from there.
This time around, last time it was sort of like, we don't know anything, which doesn't sound very good. And this time it was.
Wait, hold on. Is Circle still moving? No freaking way, bro. There's no, oh my goodness. It hit 207. Holy crap, dude. My goodness. Who's buying it after hours, bro? Like, who the hell? This thing is not stopping. Yeah, it hit 207. Right now, 204. But it did hit 207. You think it's like a big institution that's buying it or something? I don't think an institution would be paying $45 billion for this. Not at this level. I don't think it's Triple V. Dude, Triple V, although he is aggressive with how heavy he goes into certain names, he doesn't go this degen. Because buying this thing up, what is it? 3 times 630% from IPO. He would not, I mean, like at the end of the day, he still wants to protect his money. And that's not saying that buying at 206 doesn't mean it's not going to go to 250. But it's just the level of risk reward you're taking on. It's like logically, the risk is outweighing a little bit of the reward. So I really doubt Triple V would be piling into this. He probably would have texted me if he did. He did sell some hood calls today. He said, what did he say? He said, I sold $81 hood calls for June 27th, got paid $1, and he still has July 3rd, $85 calls on hood. So he is paying, he's selling some of those calls as well. That's weird though, bro. Goodness gracious, 204. 204. Hey, is it Roaring Kitty? I mean, don't fight the whales. Yeah, that's fair. I mean, if I talked to a couple people today who picked up Circle yesterday. I was like, dude, are you like, there's some people I respect. I was like, are you actually holding it? They're like, no, it's a trade. I'm like, okay. So you're speculating right now. They're like, yep. Like, I think there's a thesis, but I'm speculating. I'm like, okay, cool. I can respect that. But from buying at 203 on a fundamental, hey, there's upside after this 42 billion. I'm not saying there's not. I'm just confused. And I would love to know exactly how. Because again, we talked about it on Monday. Their income comes from treasuries. And the beautiful thing is that if you buy a stablecoin, you have to buy the treasuries, which means it has to be 1-to-1. So they collect all that treasury revenue. The problem is they share some of that with Coinbase. And if rates do get cut by 50 bips by the end of the year, which is what Powell said today, hopefully that happens, that's going to be a direct hit on their business. And like Robinhood makes a lot of money off interest income as well. But if we cut rates, Robinhood has something else that can really help accelerate the other part of its business, transaction revenue, because if rates come down, people trade stocks more, so that balances it out. Circle doesn't have that, from my understanding. Maybe I'm wrong, but it doesn't. The Genius Act is cool, but at the end of the day, it's just a piece of legislation. The Genius Act is just the Senate saying, hey, we will allow stablecoins to proliferate in society and we will support them. That doesn't mean that Circle is just going to go to the moon in terms of all of its revenues and free cash flow. That just means it has the legal permissions to operate. And I feel like that's somewhat priced in after 600%. So I don't know. It's a bit confusing. Powell already spoke. Powell spoke at 2:30. If you rewind in the stream, it's in the chapters. We listened to him talk. He didn't really say anything that unique other than he's paying attention to the data. So yeah, that's all we got from Powell. Circle is the biggest bubble ever in the market's history. Okay, let's do that in the chat. Let's see what you guys say. Is Circle the question is simple. Is Circle a bubble? That's it. A bubble to me, this is my definition. You can disagree with this, but my definition has always been consistent. A bubble is a stock that will fall 50%. Is Circle a bubble? This is why when Palantir people were saying at 60 was a bubble, I was like, look, it's expensive, but a bubble means you think it's coming back to 30, because my criteria is a 50% retracement is what determines a bubble. And because a pullback is like, you could have a 20% pullback, 25% pullback. A bubble means it literally gets cut in half. That's at least how I think of it. And so I never felt Palantir was a bubble from that angle. If this gets cut in half, this is going to $100, which would still be a 3x from IPO. 86% of you say yes. My goodness. Okay. There you go. Friday, the stock market is open. By the way, Sam will be on in a couple minutes. He just texted me. He'll be on in a second. 86% of you say Circle is a buble. I wonder if its first name is Michael. Then it would definitely be a little bit more of a buble. All right, let me get to an update with Trump and Iran, and then we'll keep going from there.
The criticism from...
Oh, wait, hold on. Let me make sure it's not muted like it was last time. Hold on. Okay, cool. Here we go.
Carlson about the idea of the United States getting involved in the war against Iran. The president said that he disagrees with those conservatives who are skeptics about military conflict. Here's what he said.
And they say, well, we don't want to fight. Well, you're going to have to make a choice, because it's possible that you're going to have to fight for them not to have nuclear.
Meanwhile, a statement from the Iranian government, this is from the Iranian Revolutionary Guard Corps. It's a warning or threat, really, to the people of Israel. What they say is the IRGC Aerospace Division's thunderous missiles will not allow you a moment outside your underground shelters. Either choose a slow death in the hellish life of bomb shelters, or save yourselves from the 24-hour missile rain. Flee the lands your ancestors seized if you wish to survive. So the rhetoric on all sides heating up. But Morgan, you've got to say, just watching the president's photo op a short time ago, he did feel, he just gave off a very reluctant vibe. This is a president who's clearly ambivalent about this idea of the U.S. getting involved here. He said he's got a meeting in the Situation Room coming up this hour, and he said he still has not made any final decision.
Okay, Eamon Javers, thank you. Well, let's dig into all of this. Joining us now is Hassan Garamani, President and CEO of SGH Macro Advisors. Hassan, it's great to...
All right, so that was the update on Trump, Israel, and Iran. Also, yeah, we do have quad witching on Friday. So that's another thing that could be very weird in the equity markets based on if the market makers, allow things to pump or try to hold things down. Circle right here, still going after hours at 2:04. But that is something to pay attention to. Are you going live tomorrow? I will go live for the Oscar deep dive at 9 p.m. Eastern. So no market open, no market close. But I will go live at night. I don't really know what I'm going to do tomorrow. I feel like I should. I don't know. I should think more about my future or something. By the way, guys, okay, so I have a couple of updates. Sam will be on in a minute, but I have a couple of updates. So number one, the Miami meetup. So called Derek today. Unfortunately, the Miami meetup will not be able to happen at his place. And the reason is because he talked to the security yesterday. And yeah, he's too rich, guys. He's just way too rich. Like he lives where all the billionaires live. And like, the security was like, no, we are not going to let 200 random people come to the backyard so you can throw a party. So unfortunately, we're not like he was just so sad about it. I was like, dude, it's okay. Like, I get it. Like, I understand. So yeah, unfortunately, the security is not going to allow, because I really do think there's in Toronto, we had 170 people based on all the amount of you that have been messaging me. I think it might be even more than 200 at this meetup. So yeah, that's a dub at his place, but we are going to be working on a different location. And so here's my request. If you are in Miami, hit me up on Twitter. A couple of you guys have already hit me up. I need a new location. And I have an idea of what I want the location to be like, but hit me up if you have any ideas. Obviously, it's not going to be like a nightclub or anything like that. Basically, the sort of vibe of it, the way we did in Toronto is it was a basement inside of an apartment building. It's a pretty big basement. And, 200 people easily were able to sit, drink, eat. There were tons of sofas, chairs, all that stuff. Now, this is Miami, so I kind of want to do it outside because it's going to be hot as hell. And, like, it's Miami. It should be fun. So if anyone is in Miami, hit me up if you have any ideas on what you think a good venue could be like. Obviously, I'm going to be doing my own research, but let me know. And Derek's going to make the meetup. He really wants to go to the meetup. He really wanted to host it. He was apologizing a lot, but like I kind of had a feeling, dude, like he lives in a very expensive place, and I didn't think they were going to let that many people just like show up. So yeah, unfortunately, we're not going to do there, but we're going to do it somewhere else, and we'll keep it from there. So now that that's kind of resolved in terms of the location, we don't have the location, but we do know where it's not going to be. So I can now focus on exactly where it's going to be. Most likely August 23rd, Saturday, August 23rd. Put that in your calendar. If you're flying out, you can like 95% chance book August 23rd. It's happening. I'll be there probably a week early, so I'll be spending a week in Miami, but August 23rd, that's when we're going to do it. And then we'll go from there. So get on Bezos's yacht, dude. Could you imagine a meetup on the yacht? That would be ridiculous, bro. Maybe one day a yacht. But yes, most likely August 23rd. Most likely. Is Chris and Matt coming? So Chris said he was thinking about it. Matt said maybe. I think we're going to get Chris to come for sure because he lives close by in the South. I think this is going to be one of the biggest meetups we've had. Definitely going to be one of the biggest meetups we had because just based on all the messages that I've been getting, my sister wants to come to this meetup. Like, it's Miami. It's a good time. So if you want to come and have a little bit of vacation and then, just come to the meetup, I think that'll be the case. Oh, Tanner said he's going to come down. All right. So if we get Chris to come down and Matt, we got to get Tanner to come down. So that'll be fun. All right, cool. So hopefully we can get Tanner. Matt's in Houston. Chris is in Georgia. So Chris is actually closer to Florida than Matt. So that's the update. August 23rd. Hopefully we'll get a lot of people to come through. Again, I need to figure out location and all the other details, but it's not going to be a Derek spot. Derek likely will be at the meetup because he really wants to come, but it'll be a different place. So again, August 23rd. August 23rd. It's a one-day thing. It's going to be probably from like 5 to 10 p.m. So it's not going to be some multi-day thing. August 23rd, that's what it's going to look like. And then we'll keep going from there. Yeah, stock draft reunion in Miami. Exactly. Second thing I was going to say is I texted Derek a picture of the apartment, and I was on the phone with him, and his first reaction was, "Oh my goodness." Oh my. So I want to put that out there. I'm telling you guys, I think I'm not going to spoil it. I'm not going to show you guys what it looks like. I texted it to another one of my friends today, and they were like, "Holy crap, it looks good." So I think you guys will really enjoy it once we unveil it in August with the new studio, the new setup. But I'm very excited for it. And yeah, given, Derek has lived in very nice apartments in his life, I didn't expect him to react that way, but even he was like, this is a good one. This is a really good one. So I think we'll enjoy it. It should be a good one. All right, here we go. Let's get Sam onto the channel. He is one of our favorite analysts. It's been about 2 weeks. Last time he was on, we talked about Nebius. He gave that to everyone at about $30. Stock's now at 50, so it's done pretty well. Let's get his thoughts on the macro, the broader economy, Nebius, some other stocks, all that good stuff. Sam, thank you for being here.
Thank you for inviting me again. I appreciate it.
I think we'll get started. Powell, any surprise on these rate cuts?
No, there was a 99.5% chance they were not going to cut. And you throw You throw a softball at Jay Powell, he's going to hit it, and he's going to take what he can get from the market. He's not going to surprise the market unless, of course, Nick Tamaros posts something on Twitter a week before. But either way, coming into this 99.5%, there was no way he was going to cut.
Were you surprised by the summary of economic projections? By the way, everyone's excited that you're here. So shout out to Sam taking some time for us.
Sam, what's going on?
Were you
What's going on,
surprised?
baby?
Were you surprised that only one cut in 26 and 27 is the projection?
No, that was the median projection was actually, it was like a little bit more than one cut. And that's actually been priced in the CME Fed Funds futures for quite some time. I mean, it was heading that direction. I mean, like when the trend is pretty much heading toward less rate cuts, that's pretty much where it's going to go unless something broadly changes. But the data hasn't really taken a U-turn out of nowhere. You know, GDP is still, the economy is still resilient. Unemployment isn't ticking up crazily. Inflation is downtrending or disinflating, is what it is, man. The thing that I'm annoyed about is that I put money down that he was going to say dot plot, and he didn't say dot plot, man. How are you going to have the summary of economic projections and he doesn't say dot plot?
Okay.
I don't get it.
So you are a literal degen, because for those
I am a degen.
Those that don't know what you're talking about, someone on Polymarket bet $37,000 that Jerome Powell will say the words "good afternoon." It paid out $38,000 if he said it, and he ended up saying it, so he got it.
You know, it's pretty funny. Like, obviously, it was a flyer bet that, you know, you're playing with money you don't care about losing when it comes to that stuff. There was a little bit of I think the person who posted that probably knew that was going to happen. Like, why would you put that much risk on the table? And the thing is that with Kalshi, because I'm assuming, oh no, that was a pawn market. Kalshi is where I put the bet in, which is a partner of Robinhood, in case people didn't know. And like, I like to spread the love, like a big Robinhood shareholder. And by the way, shout out to my Robinhood shareholders, guys. That stock is just performing tremendously. And someone, Big Billy, posted on the Discord. No, I did not win. I lost $150, unfortunately. But
the fact that we're betting on him literally saying certain words, this is the state of the market.
He usually says it. The thing is that if he says like "good afternoon" in a weird way, and the transcript doesn't release it the way that it actually is in the bet, you can lose that bet. Right? He goes like, "Okay, afternoon," like. You don't win. He has to say "good afternoon," but he always says that stuff all the time. Good afternoon. Good afternoon. He always does that.
Okay, so this gets me into my larger question right here. People are betting thousands of dollars on Jay Powell saying words. Circle is up 630% from IPO, up 40% on the day. Are we in a bubble, Sam?
I mean, we're in a bull market. You're going to have these crazy speculative stocks running with absolutely okay fundamentals, but like obviously at this valuation, it's pretty wild. I don't know if you guys know, but Coinbase makes a good amount of money off Circle's revenue. And with that being the case, Coinbase is actually a good buy before this and a proxy play toward Circle without actually being in it. And also the news that came out today regarding the stable coins, which was from, I think that was David Sachs that basically commented about that one. That's why Hood got a big bid up in the middle of the day. And that's why Coin did as well. Coinbase is up 13%. I don't think Hood was 16. Hood wasn't up nearly as much. So hopefully my $85 covered calls aren't going to be in danger. But with that being said, no, I don't think we're in a bubble. I just think that risk is on the table and people are just playing risk the way they are, right? Like we've had this stuff. If you would have said a bubble in the beginning of in the middle of 2020, you would have gotten smoked, and then you would have had to cover your short. And then that would have been it. And then when the bubble actually burst, you wouldn't be able to short anymore because you'd be done. Right. So this is just a characteristic of a bull market.
That's a hell of a point. I mean, if you called bubble in the middle of 2020, yeah, you were right a year and a half later, but you missed out on a lot of gains.
Yeah. And you would have been celebrating during part of that. But then when would you have covered? Right. Because you could have been right on the call, but bad on the timing. And in this market, you have to be right on the timing. The timing is the important part for your call. Like, would you rather be right or would you rather make money?
Yeah.
I'd rather make money. I don't care about being right.
Okay, so let me ask you about this stock, because this stock has not made any of us money, or maybe you're up a little bit more on it because you got in a bit earlier than me. But it's kind of hard, seeing Grab stay flat while Circle's up 600%. Has your conviction grown or weakened after the convertible note offering that they did?
No, let's stay the same. This has always been a play where it's for the long term. I don't think I've never said, hey, Grab's going to double in a couple of weeks. I don't think anyone's ever said that.
Yeah.
But retail gets wind of certain things and they start chasing it and then it doesn't come through. So people start taking their profits and rotating towards somewhere else. And that's probably happening here. But to be honest, if Uber is getting hit by Waymo expanding different territories, I think there might be a little bit of fear that Waymo is going to go into Southeast Asia, which I don't think they will anytime soon because we're talking about the data on the roads. So we'll see what happens with that. It hasn't changed. I think I've been pretty vocal about this. Like I'm not like balls to the wall long in this in terms of calls. Like I have a pretty decent sized share position, so I have time. And then even my leaps there, I got a year and a half, so I'm good to go with that one. I'm not trying to look for a big win anytime soon. You can get a little strategic if you want to, but I mean that offering, they're going to do something with that money. And if it isn't go to, then I don't know what it is. I have not dug too far into that one to figure it out. But I know there's a few people on Twitter who talk about it all the time. Gab Growth, yourself as well. Shout out to Gab Growth. He's been talking about this for a while. Also, Neil, Couch Investor, has been talking about this one too. So,
yeah, Look, I agree. If anyone's in this to get an Oscar type of a day or a Hims type of a move, it's just not going to happen. There's structural reasons why it won't. But if you think a double in a couple years is asymmetric, which is probably going to beat the market, then yeah. But it does mean there's going to be some periods of dead money, which, by the way, Hims, Oscar, all these guys went through the dead money phase to get the moon phase eventually.
Oscar was down 90% from its all-time high. 90%. It was $2 and change at its low in 2022. And now it's up probably more than 700%. I think it's up like 800% since there. So I'm not saying that Grab will go through the same thing. Grab was actually like the low $3 at some point. And that was in like early 2023. So if you made 150% return already, well, what can you complain about? It's the same thing with Oscar. It's like people are getting into Oscar right now, hoping to get a double next couple of weeks. Like, yeah, okay, momentum chasing, that could happen. But at the same time, like if it doesn't happen, people are going to vacate it, right? That's why Hibbs has kind of been sideways for a little bit because it lost its momentum. And then here we go again with Hibbs. Like we'll see what happens because with the medical headlines and all that stuff and on the big beautiful bill.
Right. Quick thoughts on Oscar. I mean, you mentioned that people are chasing it. Do you have any level of fundamental DD that you think is important about this company?
I don't have a lot, but Chris and I did a stream on the Hidden Edge podcast. We do those usually on a weekly basis. So if you want to catch up to date on the DD that Chris did live yesterday, go ahead and check out Hidden Edge Pod. It's youtube.com/the@Hidden Edge Pod. And Chris talked about that for like 40 minutes. So that'll bring you up to speed. And I think, he got in that. I believe he got in that shortly after that one. So I think it was pre-market. I don't want to say how he got in, but he did get in. So he's reaping the benefits from this. And, let's be mindful that when Chris gets into something, he's not looking for like a quick 50% in like a week, right? He's in it for the long term. He's done his due diligence. He's in it, right? So the same thing with a lot of things that Chris and I do. Like we're not looking for that weekly return with most stuff that we do. Let's take, for example, I'm gonna call myself out on this one, GitLab, GTLB, right? Like I've been a long-term shareholder of this one and I'm getting decimated on it and it's fine, right? Like it's fine with it because you can't be right in everything. But at the same time, I think the market will figure that out. And then there will be a day probably where it's running up again and the market's going to be chasing it.
Right. Yeah, a lot of this is about managing emotions now, because when you see some of these names that might not be fundamentally driven having these momentous runs, everyone, I mean, I don't care how sophisticated you are, everyone wants to chase it. But then it begs the question, if that's how you invest, if that's your style, like, do you even have a philosophy? And maybe your philosophy is chasing, maybe your philosophy is momentum driven, but that doesn't work for
some people.
Most
do that. Yeah. Some people do that. They know when to get out. That's the thing. Like if you're going to chase momentum, you need to know when to get out. Because if you think about George Soros, when he sees a bubble, he chases it, right? He gets in, he goes all in when he sees a bubble, but he knows when to get out. I think the problem with a lot of people nowadays, and I'm not saying anyone here, I'm just saying in general, is that when people chase momentum, they tend to stay in. And when it pulls back, they either double down or they hope it comes back. And then they're left holding the bag at that point. So you have to have an exit plan with this stuff, right? Even with long-term positions, like your exit plan is the fundamentals change, and so be it. But that is your exit plan. You have to have an exit plan with a lot of these, and you have to know when enough money is enough money.
Right. Iran, Israel, do you think the market cares at all about what's going on?
They care about the impact on energy or oil specifically. That's what the market cares about. I think the market's not concerned about a nuclear war because that's probably not going to happen. And hey, guys, if there's a nuclear winter or nuclear war, you don't need to worry about your portfolio. Okay. Like I don't need, I'm going to bet that there isn't a nuclear war, because if there is a nuclear war, you're not going to have to worry about any of this stuff because your brokerage account is not going to save your life.
Okay, but
you need to save your life.
If there is, what stock is your number one buy? If there is,
it's definitely not Oklo. Let's not get confused. Okay, like if there's a nuclear war, this will not benefit Oklo. All right, Oklo is a pre-revenue small modular reactor company that provides energy to data centers. That will not save your life. Okay. In fact, Oklo is probably going to be down 50% after that happens because it's a growth stock, right? The play that you might want to be in are defensive plays when it comes to that. But I'm not going to speculate, right? Like I can't say like, oh, Palantir is going to be up like 50% if we get into nuclear war, because chances are it's a growth stock. It's probably going to be hit. But you know, if you're talking about defensive, I think SPY puts pays off. If there's
what would you buy though? Give me one right answer, one wrong answer. What you would actually buy, and then what you would joke
SQQQ.
Okay, what's the wrong answer?
I know. The right answer. What I would buy would be Lockheed Martin, or buy what's that called? By Raytheon, you know, the legacy defensive plays, because they already have the contracts and they're already building the weaponry and everything. Growth stocks, software is going to get hit by far, because when you have war, the money printer turns on, and that's irreversible inflation if that happens. So that's part of the reason why the market's not too worried about getting into war, because it's actually good news for the stock market, right? But how much war is bad for the market? The bad thing to get into is probably anything with a beta higher than 2. Okay. Right. Like you don't want to get into crazy, like speculative stuff if there's a war, because then for me, if there's a war, I mean, it is what it is. But if there's nuclear war, like, dude, capital preservation. Like I want to worry about getting my money out of the stock market, not putting the money in, because I'm gonna need that money. I'm gonna need that money to buy weapons and all that stuff and protect my family.
It's a fair point. It's a very fair point. Waymo is coming to New York. Google still not really catching a bid. Is this one?
It barely makes money off of Waymo. It's not. You talk about maybe a couple $2 billion a year. That's not going to move the margin for their top line. And also on top of that, it's not a profitable business. I think the theme of it sounds good, but you got to remember, Google prints money from search, which includes the search revenue, ads, which includes YouTube. And then they also, I forget, GCP as well, Google Cloud Platform. That's how they make money. All right. So Waymo is like a moonshot bet. So
okay. So is Google still stuck at 175 in December, or?
Dude, if the market is like beyond all-time highs, Google's going to 200. There's no way they're not going to be at 200 if that happens. If it doesn't, it is what it is.
So you think fair value is obviously 200 on Google?
Well, fair value is a different story. I mean, I think if the market goes up more, you know, the market is past being overvalued, right? Like the market has always been notoriously expensive, no matter what. The U.S. markets have been expensive, and therefore the mega caps deserve that valuation if the market is just expensive as well. And I could see Google at 200 at some point, probably, if the market stays bullish. This is all with the stipulation that the market stays bullish.
Right.
Because if we get like some crazy outlandish 5-10% drop in the market, like Google's not going to 200.
Right. Okay. Nebius, hell of a call at 30. I think you got in before 30 and it's at 50 basically. Do you think this one is a little weak in terms of momentum, or is like 70, 80 still possible, which I hear some other people talking about later this year?
It's consolidating. So look at the weekly chart on that one. It's a bull flag right now. It's just consolidating. It's got a base for accumulation, and then it makes its move, and then consolidation makes its move, consolidation. You know, like I think that's what it is. I don't think it's going to drop like in half, you know, unless things change, of course. But they have the AI narrative with data center on here, right? So if you have NVIDIA in all-time highs, you have Broadcom at all-time highs, and all these wonderful chip stocks. Also, Astera Labs, that one I've been talking about for a while as well. That's almost back at $100, and Marvell Technologies up like 7% today after their AI investor day yesterday. You know, those, wow, was that 99? Holy crap.
That at Marvell also. Wait, did the investor day happen yesterday for Marvell or today?
Yes, it did happen yesterday, and they got a bunch of upgrades this morning from the big banks or from the big IBs. So that one, the sell side is really trying to sell that stock. I mean, they really hiked those price targets, which is really good. I mean, it's always been a favorite in Wall Street, and also the basically the hyperscalers are all of their clients. So, you know, it's going to have money coming through the door. And I think the biggest thing about the AI Investor Day was just the crazy numbers they were throwing at the TAM, total addressable market. Like those are some big figures they were throwing out there. And I don't know if that's going to, like, you know, you want to sell your product, great. But like, I don't know if I believe in 260 billion this year. Like, come on.
Do you think Sam Altman saying that Meta's poaching engineers by offering $100 million, like an MBA contract, do you think that just means you buy semiconductors because it's bullish for AI in general?
Yeah, that's bullish, dude. That's bullish. If these guys are throwing money left and right for talent, like I don't think this is the top. And I'm not trying to like pump it saying, guys, we're in the early innings of the AI race, like, which I do think we are. But that doesn't mean that the stock market is in the early innings of a massive boom. Two very different things.
Yeah.
But at the same time, like, I think if you got a long-term time horizon, like you're going to make a lot of money in the next 5 or 10 years.
Okay, so I'm happy you bring that up because I think this transitions into another good conversation. By the way, guys, I think Sam has about like 7-10 more minutes with us. So if any questions on any specific tickers, we'll get his rapid fire thoughts on them before he has to leave.
Bad. I want to talk about Reddit and Lemonade.
Oh, cool. Okay, so we'll talk about those too. So I want to get your reaction to this. Coatue put out market cap projections by 2030. Do you agree or disagree? Did anything stand out to you on this list in terms of where they think these stocks will be in the next 5 years?
What's Alibaba at right now?
Alibaba's at 100 billion. They think it's going to be 437.
I don't know how you can get a 4 times with Alibaba without somehow inflating the entire Chinese markets, because Alibaba is essentially the Amazon of China, right? So it probably like about 5 to 10% of that entire index for the Hang Seng or whatever these tech indices are out there. Adding an extra $300 billion is a lot of money to add over there for China. And because the US has a premium over that one, you would have to increase the market caps of these other companies on the left column. So if we're looking at this from the left side, this makes a lot of sense. I actually think Oracle is probably much higher in that list. I think
Baba's 250, by the way. Baba's 250, not 100 right now.
Oh, okay. Okay, that makes sense. I can see Baba getting back to $200. That makes a lot of sense. AppLovin, oh wow, 300 billion. I would love to see that. CrowdStrike 300 billion. I don't know. Maybe Mercado Libre. I think Mercado Libre is gonna be one of the first $1 trillion ex-US companies out there besides Saudi Aramco.
What do you think about Meta at 2.8 trillion? You think that's undershooting it or no?
I think that's undershooting it. You know, if we're talking about Microsoft pretty much doubling from here, I think Meta is going to easily be over. No, Meta's at like 1.8, right?
Yeah, 1.8. Yeah.
That would make it at
3.5.
No, that's undershooting it.
I agree.
These are very inflated valuations. Like we need to see some serious stuff happen in the next 4 years for these numbers to come to fruition. ServiceNow, I think, will be $1 trillion. I'm not trying to pump Palantir bags, but if the market is running that hot, I think Palantir is not going to only be 528. I think it'll be more than that. Like there's no way there's no way Microsoft is going to be double it is today, and Palantir is only like 30%, 20% higher from 30% higher from here. Like that'd be wild.
Right. Okay. Is there any stock not on this list that you think is going to be a massive company in 2030 that you don't see here?
Google will be.
Oh yeah, that's what I was. Yeah, Google's not on the
list. That's stupid that Google's not on here. I mean, they're going to figure it out. Like that's ridiculous.
Are they?
Are they going to figure it out? Of course, they're going to figure it out.
Do you have any doubt in your mind they won't figure it out?
No, I have zero doubt. They're a $2 trillion company. They're not even. They're less than $488 billion. Like Google is going to take a more than 1/3 of its price today. Google, where is that cash flow going to go? Where are all those people going to spend money on their ads on? Like, are they completely going to drop YouTube? Are they completely not going to use the 3rd largest hyperscale in the entire world, going at 35% year over year? Like, come on, man, come on. Google's going to be up there. Tesla. I think that's overshooting it.
You think it's less than 2.5 trillion by 2030?
Yeah, and the reason why is because Tesla is probably not going to have all these arms under it at this point, and Tesla might not even be its own parent company anymore. It might get acquired by a different company like XAI or something.
You don't think Tesla would acquire XAI? You think it would be?
I mean, the only thing is that it's a publicly traded company, so they can't pull in capital without people investing it without diluting shareholders. XAI, on the other hand, they have like an unlimited wallet from Silicon Valley. So XAI can just get so much investment to be able to acquire a $1 trillion company. Right. So what is XAI right now? Like, it's just outlandish amount of money in order to do that. I'm not saying they're going to do it. I'm just saying that is more of a probability than Tesla being at 2.5 trillion.
Yeah, I think a lot of Tesla shareholders would be upset though if Tesla's.
No, that'll be good because XAI is going to acquire them for a lot of money. So
no, but the most they're going to acquire is 1.5. Like, they're not going to have 2 trillion of VC money to. I mean, I don't know.
Super speculation, dude. I have no idea. Like, literally looking at what Tesla's going to be in like a year from now is very difficult to do, let alone 2 months from now.
Yeah,
it is an insane take, Chris Hunter, because I have no idea. I'm just guessing. I can't see Tesla at $2.5 trillion without making some sort of drastic.
I can see Tesla easily at I can see them easily at 2.5
No,
trillion.
I'm not saying I can't see it at 2.5 trillion. I'm saying I can't see it as just a single parent company at 2.5 trillion without making some sort of drastic move to get up there. So maybe Tesla acquires XAI. Well, then if that's the case, okay, fine, $2.5 trillion. But like, I feel like something's going to happen between XAI, which is one of the most expensive private companies in the entire world, SpaceX, and Tesla. Like, I just feel like he's going to, I don't know, maybe he might do something to consolidate all that stuff. We'll see.
Okay, Reddit, give me your thesis here.
Dude, Reddit's going to 200, man. You saw Jason yesterday, the 160, 170 base. Listen, oh, wow, battery exhausted. That thing went out. All right, I'll take care of this from here, Amit. I'll take care of this. All right, so guys, this is the market close. Anyways, Reddit, yeah, dude, Reddit's going to 200. I don't know what it is, but it's going to 200. If this market stays balls to the wall bullish, it's going to 200, dude.
Okay, but why? Because the headwind is still Google search is not good for them.
But okay, so they already these people are probably working overnight trying to figure this out, and I'm sure that they will. Right, this is a profitable company. This isn't a company burning cash every single day. But on top of that, they released the AI tools, AI powered advertising tools. I don't know what that means, but at the same time, this is a momentum stock, right? So very volatile. So if the market catches wind that, oh, hey guys, they're figured out, like they're not decimated by the Google search. But when you think about it this way, if those AI queries are sending results to people that are sending them to Reddit forums, which by the way, is probably one of the best sentiment indicators when you think about having that entire database in the palm of your hands, just sifting through Reddit boards and seeing what people think about a certain keyword or whatever. Reddit probably is the most accurate and up to date when it comes to that. And it's like real time, dude. These boards in Reddit, they have there's people who are like obsessed with stuff on there, and it's like its own community, right? Multiple communities. So if Reddit has control of all of that data, that will still make them very powerful. And data is probably the most important narrative across these other companies, right? So you think about Google, Waymo, you think about Tesla, especially Tesla with the amount of data that they have. And you saw it the other day, how much data that they have on the road versus Waymo. That's the reason why it's just so, you can't put a price tag on that. And I think Reddit, in my opinion, I think it's going to 200, not because of the fact that it's getting price target hikes, but also because it's a very strong momentum stock. We have not lost this level yet. If we go, wait, I think we might get back to 110 before it goes to 200. But if it doesn't, do this thing could just 160, 170 base, consolidate, take off again.
Do you also think that given the high beta, if Google is able to catch a bid, let's say Google gets to 200 and like the market kind of moves on from the whole search stuff, that's clear skies for Reddit.
Yeah, it's going to be clear skies for Reddit because if Google can figure it out, Reddit has a partnership with Google as well. They have a partnership with a lot of people, but if the search thing gets resolved and Google figured it out, then Reddit will definitely figure it out. Look at its growing base. Like it also has the I wouldn't just say smartphone penetration, but it also has the penetration across the entire world because they're growing as a scale globally very quickly as well.
Do you use Reddit every day? Or no?
I gotta be honest. Sometimes when I do searches on ChatGPT or whatever, it brings me to a Reddit forum where I find out answers for IT stuff in there, right? Like I used to use it a lot in the past. Now when it comes to certain things, like if I have like an issue with like a server or whatever, and I can't seem to figure it out, some person on Reddit has figured it out. If I want to build something at home, some person in Reddit has already done that. So,
right. Okay, Lemonade, when did you get in this one? This one's also getting some retail momentum. Do you think this is the next 5X?
I think it's, I think as long as they head toward profitability, I think there's a very good probability that they will, 5X from here would be very difficult. But they are a smaller cap company with just a growing user base. So if you think about insurance with a lot of legacy auto carriers, this company specifically, they don't have a bunch of agents that are trying to sell their insurance products, much like Farmers or State Farm does. They basically do it in-house through an app, right? So I think all of this tailwind when it comes to smartphone penetration, which is clean across the board with a lot of companies that they own, along with mobility as well. And I think, I'm just speculating, but I think Lemonade will figure out a way to get in on the full self-driving narrative to be able to gain that market as well, because their technology is actually really good. If you ever use their app, it's like, it's better than other insurance apps, but at the same time, also the AI capability that they're releasing that will save them on costs, which has actually shown on their income statements, that is the important part about this. The fact that they can scale very rapidly at about 26% while still slowing down costs. And I think that is the story when it comes to Lemonade, the scalability. It's very hard for these other companies to do that because they have insurance brokers as well as third-party insurance agents selling their product. Lemonade kind of sells itself. However, the sales and marketing, that's the part, it's kind of the same thing as Hims as well. Like Hims has no pharmacies or anything. They're mostly on an app. It's kind of a similar situation, but I think that that's going to continue being a long-term story for me. It might be peaks and valleys when it comes to Lemonade. However, I think that they will be, as long as they continue to head toward profitability, it's just a matter of scalability and reducing costs.
So when did you get into Lemonade?
My average is like 26, 28.
So you got in like over the past month, basically.
Yeah, I was accumulating a lot, a little bit as the market was going down in April, but I didn't add to it a whole lot because, again, not a profitable company, so it stays in my speculative bucket. Like I'm not like balls to the wall long with Reddit. I'm sorry, with Lemonade. Like probably I think it's like a 1.5% position, but something like Reddit is more like 4% of my portfolio because of the fact that they are profitable on a free cash flow and GAAP income basis.
Got it. Yeah, we'll do a deep dive on Lemonade as well, probably in another couple weeks. All right, Sam, some rapid fire, your thoughts on some of these tickers. GitLab, thoughts on that?
Man, I know I feel like this is like one of those things where it's like, I kind of don't want to be wrong because my name's on it, but I feel like I'm going to be right with this one only because its valuation is so unjustified for what it's putting out in their earnings reports. You take a company that's growing at like 26%, besides GitHub, they're the only publicly traded leader when it comes to DevOps. And when it comes to software, source code repository management, as well as continuous deployment and continuous integration pipelines. Think about all of these engineers building AI LLMs and applications surrounding all of these products. They need to store that code somewhere, right? So you're either going to use GitHub or you're going to use GitLab or you're going to do something open source in-house, whatever it is, but you're most likely to use one of these two products. And while GitLab only makes like $200 million per quarter, GitHub, of course, is printing a lot of money when it comes to that, but you can't invest in GitHub solely. You have to buy Microsoft, which owns GitHub, right? So this is my play on that entire secular theme. But if GitHub was traded publicly, I think I would own GitHub, a large amount of GitHub, but I can't do that, right? So this is more of a secular theme trade as well as a asymmetric trade as well with Leaps.
Okay, Oracle, thoughts on those earnings?
Man, those earnings are wild. 70% for this year. Like, no wonder the thing is ran. I think it might continue running. I've traded it. I don't have it, and it's fine. But I think it's underestimated how much potential this has as a hyperscaler, the fourth largest hyperscaler in the world, one of the leaders in private data center. But I think this whole narrative is providing a tailwind for Nebius. So that's why I'm in Nebius. Much higher beta, but at the same time, much more runway.
Yeah, this one I felt like an obvious one, but like at 170, it felt a little pricey as well, right? So
The risk reward wasn't really there.
Right.
And of course, that's what everyone's thinking, and that's why it's doing what it's doing. Because you have a lot of sell side analysts trying to jump in this one. But yeah, I think this thing can run. It's like 600 billion right now. It could probably go to $1 trillion probably in the next couple of years.
SMCI. Say something nice about this.
There's some politicians that are in that one. So I think that has definitely has a lot of potential. I mean, I'm not a fan of it, mostly because it was already tainted by its books, but also building servers is a very low margin business. You need a lot of volume. So I would say for this one, it's a very big high beta momentum stock. So it could run. But from an investment thesis, it's hard for me to get in here. Chris was in this one, but he got in this around like the 28s. And it's at 45 now. And I'm pretty sure he took most of his gains off the table. Someone wants to do AST Space Mobile. They had news today that they're partnering with Vodafone for rural India mobile users. And that's a $1.1 billion market that they can address to. Not $1.1 billion, but a 1.1 billion population of people they can address to, which obviously not going to gain all of it. But at the same time, I think this is really a growth story, even if it's pre-recurring revenue. I think what this is turning into is probably somewhat of a hyped up retail stock at this point. It essentially doubled in the last few weeks. For me, I'm still holding on to my full size position, not planning on selling out or trimming anything anytime soon.
Rivian, any thoughts on that one?
I don't know, man. That's a tough one. I saw someone talk about that one over there. I don't know, man. They're not profitable. It's very difficult to be on that boat.
Yeah, I mean, if you're gonna take a chance on EVs, although Rivian's probably cheaper than Tesla, it's just hard to bet.
Well, yeah, it's difficult. I mean, at the end of the day, Tesla's still printing money, so it's very hard to argue against that. And plus, you have the richest man in the entire world running that one. Rivian is still, I would probably say, the secondary leader, but EVs are starting to become a commodity. EVs are already a commodity at this point. So it's going to come to a point where someone's going to be like, hey, do I want to buy an EV from GMC that's a lot cheaper than Rivian, or should I stick with the Rivian? And then that's where it becomes a problem, because now you have options. Before you didn't. So you couldn't get an SUV that was EV before. Now you can pick across like 3 or 4 manufacturers without buying a Tesla.
Yeah, and Matt makes a good point. No one's investing in Tesla because of their car sales. So if you're investing in Rivian because of their car sales, might not be the best reason. Applied Digital, any thoughts on this?
I don't know. Jason's in this stuff. I haven't even looked at this one.
Okay, the company what do they do? Honestly, I couldn't tell you much. I believe it's in the data center space, but the company they just signed a partnership with, CoreWeave. Is this published to you, or what are you thinking?
This is going to run with the narrative. This is just a product of a bull market. Look at TSSI.
I've heard of this one as well.
TSSI was a microcap at some point. They're one of the suppliers for Dell. So yeah, that one I kind of regret not buying in April. I was going to buy it in April.
But see, look.
I was going to buy it in April.
But the reason you didn't buy it in April is because it was worth...
There were too many things to buy.
And also it was worth $50 million. Like,
I know.
You're not the type of guy to buy a $50 million company.
I would with this one because I knew of its potential before April, but I didn't buy it because it just was not on my watch list or anything. And by the time I looked at it, it was at $13. And of course, it already ran, whatever. And it's like, missed out.
ANET, any thoughts on this one?
Oh man, super bullish this one. This is I wouldn't say they're a Broadcom play, but they are in the networking segment space. They are profitable though, so it's not like they're going to zero at all. This one has a lot of backing behind it. I think that it has a lot of potential to get back to 130, make a new all-time highs.
Okay. Bitcoin, any updated thoughts on this?
Man, this thing's going 150K. I don't care what anyone says. If this is the Bitcoin top, I will be surprised. We'd have to be in a bear market if this one's going to the top. But I think this is starting to become a hedge against government debt. So, and you see all of the stable coin news and everything, like it's just an inevitable run at this point.
Okay, last one, Sam. Are you long AMD?
No, I'm not.
Okay, then I'll do another one. I thought you were long AMD. I was like, I thought you have an opinion on it.
No, I'm not long. Rocket Lab, I'm long Rocket Lab.
Okay, so I mean,
Yeah.
are you more Space Bob or are you more a Rocket Lab guy?
I'm a space. I like both. I mean, that's the reason why I invested in both, because I know like it's just so, I don't want to say obvious, but it's like, where else are you going to go when Earth runs out of space? Like it's just, and there's so much potential in terms of building a network infrastructure, but Rocket Lab's a little bit of a different play. They're more of a launch platform, but they also have their software as well. So, I mean, it's just, the market's staying bullish. It's just so hard to not be long some of these small cap plays. But at the same time, I think when you think of the most tangible revenue today, that would be Rocket Lab for sure. Rocket Lab also has the optionality of being in multiple verticals. Obviously, ASTS, they're only in providing mobile connectivity, right? So not competitors by any means. Rocket Lab could partner with a competitor, but that would not make them a direct competitor of AST.
Right. Yeah, I really agree that the business model of ASTS is probably a bit more attractive than Rocket Lab, but that does not mean that Rocket Lab has a bad business model. It's just different. So it's a fair point. All right, I actually do have one last fun question for you, but before that, Sam's Twitter right here in the chat. Sam, Substack, you want to put that out there?
I got some news with the Substack actually, but I'll probably release that one later on.
Okay, so I'll put.
You can throw the Substack out there if you want with other articles, but I got some news. I'm going to make some big changes in that one.
Okay, and you can access his Substack as well on his Twitter, and then Hidden Edge Pod. I'm putting that in the description as well. You guys can subscribe. Sam just crossed more than 10K, right? Yeah, 11K. You were on like 3 weeks ago. He was at 10.
Yeah.
So
yeah, it was a 10K, man. I'm getting big out there. It's great. It's fun having you guys actually liking the stuff that I do, because I was at less than 1K like less than a year ago. So it's nice to be on the stream. Tanner gave a shout out yesterday. Shout out to Tanner as well. Appreciate that. Of course, Chris, early partner with a lot of stuff. Chris and I are doing the Patreon as well. So, we do the Hidden Hedge podcast. We also do private calls as well with the Patreon as well. So go ahead and check that out. The only thing I can say going away is like, guys, be careful with the market because things are just getting too exciting right now, which is great to see. But when there's less deals on the table to look out for, that's when it starts to become a little, I don't want to say edgy. Like I'm not short the market or anything, but like when there's not that many deals on the table, it's very difficult to say, let's go balls to the wall long.
Yeah.
Do I have an OnlyFans? No, I don't have an OnlyFans. Sorry. I don't got that.
Okay, my final question to you is going to be 5 stocks to build an ETF 1 year from now. What are you doing?
CrowdStrike, Cloudflare, Rubrik,
heavy SaaS so far.
Hoodie.
All right, from this price.
Yeah,
I love it.
From this price, I'll still choose Hood. Wait, from this price, like we're trying to get alpha.
1 year from now, yeah.
Oh man, that's difficult because then
you still gotta put Hoodie there, bro. You still gotta put Hoodie.
I'm still putting Hood in there. I think I'm gonna put Marvell in there, as well as Tempest AI. I'll put it in there as well. I'm gonna have to put Tesla in there. I feel like Tesla is it's gonna catch up at some point. And the last one, I don't know. I can't think of anything on top of my head right now. I don't know.
Cool. There we go. Sam, thank you so much. His Twitter in the description.
Appreciate it.
We'll see you on probably in another couple weeks. We'll keep talking.
All right, man.
See ya. Thank you.
Later.
All right. We are done. It's a 3-hour stream. Doesn't feel like 3 hours, but we have been live since Mr. J. Powell started speaking. By the way, this guy was coughing a lot for the first 20 minutes of the press conference, and then by the end of it, he stopped coughing. But it was kind of weird, dude. It's like every other word, it was like a little bit of a cough. Nonetheless, we got through it. We're done for the day. Yeah, no market open tomorrow, guys. No market open tomorrow or close. We'll be live for the Oscar deep dive at 9. Steve's going to join along with someone else I found on Twitter. So I think it'll be 3 of us. Maybe I'll get one more person. And so Oscar, by the way, running right now after hours. I mean, look, sometimes this is how stocks turn out. Like for the OGs that have been in this name for a long time, this is the day where you sit back and you tap yourself on the shoulder for being patient, allocating capital, and trusting in your thesis. For those that got in this week, congrats. It was amazing timing. And for those that are getting in right now, you just have to ask yourself the question, what am I getting in for? Where's my upside? Where's my downside? Am I ready to buy the dip? And then more importantly, do you still think there's alpha? Which, again, less than a $5 billion company, there probably still is a ton of alpha if the thesis is as good as people are saying it is. But, it all comes down to how you personally think of the risk reward before you decide to establish a position right here. 1946 after hours on Oscar right now. I'll try to see if Chris is available for the deep dive. I don't know if he will, but Chris also just did a video on the Hidden Edge pod. So if you guys want to watch him talk about it, I linked it in the chat. He literally talked about it last night. So if you do want to deep dive from him and Sam, you can look at that. Now, Chris has just recently started studying it over the past couple of days. So someone that I got has been in this for like a couple of years now. So hopefully we'll be able to get a little bit more of a long-term perspective from him. And then Steve, has done all the numbers. I was talking about it with him today, so I think Steve will be good. And if Chris is free, then we'll try to get Chris on as well. NBC News reports that the White House Situation Room meeting on the Israeli-Iran war has begun. Okay, cool. So after everything we dealt with today, and after all the quotes we got from Trump, it looks like they are in the Situation Room talking. I would imagine in the coming, it's 5 p.m. right now. I would imagine by like 8 p.m., 9 p.m., the next couple hours, we should get some level of analysis on what Trump's doing. If they're going to take an offensive strike, Bitcoin right here, 104. That obviously could affect markets. Futures will open in an hour. S&P basically flat after hours. But yeah, I think by tonight we should get some details. And if we don't, then, they might hold off until tomorrow. Now, technically the market's closed, so they could say anything market moving tomorrow and the market can't react to it. So that's another thing to think about based on whatever positions you're in. I'm moving back to New York City in August. If you ever do a meetup there, count me in. Yeah, so August we will do November, December. So we will definitely have another. We already did New York City in August, or we did it in January, but there's a lot more of you there, so we will definitely do New York again. Market's closed tomorrow. Great day for regime change, dude. I wonder how serious Trump is about potentially changing this regime. He didn't really mention it today. He kind of implied it in a different way by saying they should have taken the deal, but we're going to have to see. We're going to have to see how this ends up playing out. Yeah, Miami meetup. I'm excited for it. Again, I will get details to you guys probably over the next couple weeks, but August 23rd is the one I'm thinking about. Is Oscar still moving after hours? Are we still pumping? Dude, this is pure retail, by the way. I think this was on, it's up 5%. This Oscar was number, I think, 8 on Bloomberg's social intelligence list. Bloomberg keeps track of all the names that are getting momentum on the internet just by scraping the APIs of all these websites. And Oscar was number 8. It's probably number 1 now. So even the hedge funds probably saw today that, hey, retail's buying this up heavy, which could be good in the short term, could be bad in the short term. You kind of just don't know. Hims went through this many. Hims pumped like crazy, then it dumped like crazy, then it pumped like crazy, then it dumped. And then now finally it's kind of found its base around, I would say 55 to 60 at this point. Hims right here closed above 61. You could argue same thing would happen to Oscar. You could argue same thing's already been happening to Oscar year to date, as you can see, peaks and valleys. But now it's starting to look like it's really breaking out. And that could be very bullish going into the 20s potentially on Friday if this continues as well. I mean, it could get to $20 in like 5 minutes, to be honest, 25 cents away. So it could be very bullish about it. Are you sure about August 23rd? I'm about 95% sure. Look, if it's about booking a flight, then give me a week and I will be 100% sure. But I don't want to do the last week of August and I don't want to do the first 2 weeks of August. So August 23rd to me, that weekend, 22nd to the 24th, that seems like the best weekend. So yeah, that's what I'm thinking about. But in a week, I will give some final confirmation. And then we'll do it. We'll do it for Miami. I booked my flight already. It'll be fun, dude. It'll be fun. These meetups are fun. They're really cool. Lot of diverse backgrounds in regards to investing. Some beginners, some people that have been in it for a long time, and it's just everyone gets to share their thoughts and ideas. And I think because it's Miami, I'll be able to find a really good venue. I just have to do a little bit of research, but I'm expecting a big turnout on this because just of what I've seen. And if we don't, that's fine. Boston, we had like 50, 60 people. The intimate meetups are also really fun because then, everyone gets to talk to each other. But I need to be prepared if it's big. And based on what you guys have been saying, it feels like it'll be a bigger one as well. Don't change the dates. I've already booked my flight. Dude, whenever I book a flight, I never get insurance ever. And the last time I actually did have to change my flight, I had to pay $95 because the podcast I was doing with Brett from Figure, he ended up doing it on the only day he was free was the day that I was flying out. So I have to fly out a day early. So yeah, I'm so bad at hey, insure your flight for $20. I'm like, $20 for insurance. Get out of here. I'm paying $20 for that shit. And then, you end up needing to change it. But it should be fun. It should be good. And I think people will enjoy it. Shout out to Fabio. Toronto was lit. Toronto was awesome. Fabio, he was awesome seeing people there. But Miami's going to be like warm and, it's going to be a better environment. Toronto was still kind of cold. So this one I think will be a little bit different as well because we should be able to be outside. And then, yes, Vegas should be October. LA should be September. New York should be November. And then December, I don't know. We're going to have to see. I still want to do the UK at the end of the year, but we're going to have to see. Circle up another 4% after hours, dude. Goodness gracious. It is 207.8. It's kind of wild, bro. It's really kind of wild. It's the market that we're in, folks. This is the market that we're in. Dude, you know what I have to do in Miami? I have to smoke a Cuban cigar. That's what I need to do. I've smoked a cigar before, but I need a Miami authentic cigar. I need one of those. Miami dates looking like, again, in a week I will confirm it, but August 23rd. The day of the meetup will be August 23rd. That's the only date you need if you want to stay for a weekend or whatever and have a little vacation. That's fine. But August 23rd, that's Saturday, most likely will be the day for the meetup. But yeah, I need a cigar, bro. I need a Cuban cigar. I've only smoked a cigar once in my life, but I need to actually do one for Miami. Get a Cuban chain. Dude, I've been to Miami before, but it's been a while. So it's gonna be fun to see a Q&A with Vlad and Robinhood. What do you mean Q&A with Vlad and Robinhood? Vlad's doing a Q&A? What are you talking about? Are they live doing a Q&A? They're not doing a Q&A. No, there's no Q&A with Vlad. If you're talking about the event from yesterday, then the annual meet. Oh, that's today? What? Holy crap, I forgot. I don't know if we can end the stream, guys. I don't know if we can end it. That is today. Holy crap. Hold on, let me pull that up. How did I not remember that? Events. Today's what, June 18th? No, dude, that's June 25th. What are you guys talking about, bro? What are you guys talking about? It's June 18th or June 25th. Dude, we have too much fake news in the chat right here. Look at this. It's June 25th. Today's June 18th. Unless they're doing some other type of Q&A. I was like, I would not forget that, bro. If they're having their annual meeting, I feel like I would know that. So, no, for sure. Yeah, this is June. Unless there's something else I'm not looking at. June 25th. In the app, they're doing a Q&A? Hold on. Let me pull up the app. Unless they're opening it up for questions. But that doesn't mean they're actually doing a Q&A. Oh, the Say Technologies one? Yeah, but that doesn't mean they're actually doing a Q&A right now. Okay, that's fine. So there you go. All right, cool. We'll be June 25th. We'll do that. Dude, I freaked out. I was like, I had another chance to listen to Vlad, bro. Okay, so this was the dream I had last night, okay? It was a crazy. I told you guys in the morning I had a dream of a Vlad and Carp. I kind of remember it now because it's been 8 hours. basically everyone was in Japan, okay? Vlad had an event for us in Japan. It was some crypto event in Japan, okay? And I don't know why we were in Japan, but we're in Japan, right? And like, I don't even know what products they were announcing, but it was just in Japan. And then freaking they bring out all this sushi for everyone to taste. They bring out all this sushi, and they're like feeding us sushi on the stage while they're announcing the products. It was the weirdest thing ever, bro. It was the weirdest thing ever. That's so like I don't remember how it started or how it ended. All I remember is that I was eating sushi. And then I'm walking down from the building, like one of the alleys in the building, and then Karp shows up. And he's wearing a very specific jacket, like a jacket that he wore back in December when I met him at the Grand Prix. He wasn't wearing the white shirt. He was wearing a jacket. And he was just like, "Hey, Amit." I was like, what are you doing here? It was like, "Oh, I'm eating some sushi." It was the weirdest shit ever, bro. Like, I know it sounds weird, but that's what a dream is. It's weird. Dreams are weird. And so I woke up and I'm just like, what happened, bro? I'm eating sushi. I'm in Japan. Vlad, like, I kind of think he was on stage announcing stuff, but all I remember is the sushi for some reason. And then Karp walks by, and then we talk for a little bit, and then I wake up. And so it was very weird. But yeah, that was a dream last night. I think the reason I thought of both of them is because the Robinhood event was yesterday, and so we focused on that. But then B, that New York Times thing happened yesterday, and I wrote up a really long post. So I was like thinking about Karp and Palantir and stuff. And I guess those two things, I slept at like 2:30 last night. I guess those two things were like the last things on my mind for whatever reason. And then they showed up in my dreams. So what type of sushi? I don't know, bro. It was sushi. Like I definitely don't remember if it was like a shrimp tempura roll or anything like that. My favorite sushi though is eel avocado. Eel avocado is my favorite sushi. I think that's so underrated. I don't know why people don't like eel avocado. Did you change your sheets? Oh my gosh, bro. It was weird though. I was just like, why is that happening? I'm not buying Enphase now. Jason said it right. Don't buy Enphase until a Democrat wins the presidency. Until then, it's a little tough to buy it. Iran would accept Trump's offer to meet soon. New York Times citing a senior Iran official. That's bullish. If Iran is ready to meet with the states or with the United States. Let me see if I can get the source for that. That would actually be, yeah, there you go. New York Times. Iran would accept Trump's offer to meet soon. Dude, if that's legit, then all that stuff the Iranian Supreme Leader was talking about today, about freaking, America shouldn't get into a war they can't end or whatever. All of that was just talking to talk. That means they're ready to take a deal. I mean, if the conclusion to everything is, hey, Iran's going to take a deal and Israel got rid of their nuclear facilities, this is a win, at least for the markets. You can have whatever political belief you want, but this is a win for the markets because it's de-escalation. It's not getting into a crazy war. It's not going to be Iraq 2.0. And if you genuinely believe Iran having a nuclear weapon or the Middle East nuclearizing is bad for the markets, bad for geopolitical instability, then if that's not a threat anymore, then boom, you're done. Now, granted, we don't know if that's the case yet, but that could be something rather bullish if that's fair. Maybe Powell will cut off that. Yes, maybe. Dude, eel avocado is lit. Eel avocado is a great one. Gene, were you betting I would end the stream by 5:15? All right, now I got to wait till 5:20 for sure. Now I got to wait till 5:20. Amit can't get a girlfriend because then he won't be able to stream all night. You know, I've been thinking about that. Like, if that does happen, there's no way in hell I'd be able to stream as much as I stream. Or I'd have to tell her that, she's number 2 on the list of priorities to the stream, which might not be the best thing to do, to be honest. Might not be. Yeah, just get a boyfriend. Oh my gosh. Yeah, technically it is my job, right? So she would have to understand that. That's fair. That is very fair. Yo, Kevin is an animal, bro. Kevin has 7 kids and he's live 8 hours a day straight. I don't think it's wrong to like stream in the morning, stream in the afternoon, and if that comes out to 8-9 hours, that's fine, right? Because that's just like people go to work from 9 to 5, right? So 8 hours, 9 hours, like that's just putting in the hours. But he does it straight. And I'm like, dude, like even I need a little bit. I need like an hour. I think today I had like 2 hours to just like chill out for a second before we went live again. So that is a pretty sophisticated level of work ethic to go straight 8 hours. Because again, at some point, you know, you're just constantly talking, and I mean, I can yap. It's just even I need to give my voice a little bit of a break during the day. What else? Medium well eel avocado. I've never had that. That would be pretty cool. John said, just hit 1 million subs on YouTube at a beginner investor bought hood a few weeks ago. Thanks to you. Yo, that's super cool. Okay, so John, what is your channel? Hit 1 million subs. What do you do? Let's see. Let's go to your channel. You do, wow, you got skateboarding videos. Oh, that's super cool. All right, if anyone wants to check out John's channel, I'm looking at it right now on my other screen. A lot of shorts and skateboarding and scooter videos. Dude, this is the beautiful thing about YouTube. Like, there is so many different niches of creativity that people can access. And I love it. That's two worlds of YouTube colliding. One is on skate park YouTube, coming into investing YouTube. I got to learn some tricks on the skateboard then. I tried to skateboard when I was younger. It didn't work out too well. But I have deeper, like, you know, the X Games and people like Tony Hawk, like that shit is crazy, bro. Like people legitimately being on a scooter or a skateboard and like going down 100 feet and then like jumping in the air and like, oh, did we ever, hold on guys, we didn't watch something, hold on. Okay. So I said we were going to watch this. Okay. So we'll end the stream after we watch this. I said we were going to watch this, but after the stock draft, and we never watched it because the stock draft went too late. But I think we should definitely watch this because this shit was crazy. And I think it would be pretty entertaining to watch for people as well. So I think we can watch this here. What's going on with the big Google drop before the close? Honestly, I think it was that Microsoft headline, but I don't know why it would be affecting Google. The Microsoft trying to leave OpenAI or whatever. But Google's up 0.3% after hours. I feel like it was just algos dumping it before the market closed. Because again, Thursday, there is no market open. Oscar 1976 after hours. HIMS up a little bit. Circle up another 4% after hours. 207. S&P basically flat right now after hours. Yeah, I should do it in Miami. That's fair. We should learn how to skateboard in Miami. Amit's girlfriend would be like, who's this ontology person you talk about all the time? You know, hopefully she knows a little bit about Palantir, because like she's gonna have to know about Palantir. Okay, cool. So this is what I want to show you. This is what I want to show you. This was, if anyone's ever seen this Oz guy who does these mental tricks, it is absolutely crazy. I've been binging his videos because I can't believe what he's doing. You guys are not going to believe this either if anyone hasn't seen this. So let's take a look at this. It's kind of wild, but we'll end out the stream with this.
Next year will be something else. What's the flavor of the week? But I'm going to tell you something that never gets old. Never.
Magic.
Nope. Better. It's not what you know. It's who you know. For example, your Rolodex right there, Andrew Sorkin's phone.
He does.
Just the people in there, the value. If you were to go through, I mean, the fact that you could right now text Elon Musk, he might not know your name, but either way, my favorite video of last year, by the way.
Oh yeah, Aaron.
Oh, that was so good.
I'm in his phone as Jonathan.
Jonathan, it should be
Jonathan. That's
I've
right.
saved
Aaron
you
was
as
some guy
Jonathan
yesterday, right?
You know what? I want them to know.
You guys probably saw him with Joe Rogan because he guessed his pin code and he went viral. But what he did on this one, I think, was even more crazy.
The viewer to know.
Yep.
I want them to know exactly. I walked in here, I don't know, 15 minutes ago, commercial break.
Yep.
I said to Andrew, I gave him some thought, okay, to preload this, to think about this. And I want to tell them exactly what I told you, which is, Andrew, to grab your phone, to look through, and to think of any business leader out of your whole phone.
Yep. That's what you told me.
And I want you, go ahead, you know what, grab your phone, hold it up to you.
I got it.
And you got 1 million people in there.
Yep.
And it could have changed his mind over and over and over. In fact, I think you did more than once.
Yeah.
And to think of one person in there.
Yep.
Have you got somebody in mind?
You told me, just we're clear, a CEO of a major company.
A CEO of a major company.
Yeah. So I went back and forth, and then I said,
have you told anybody?
I've not told.
Have you whispered it? Have you written it down? Have you done anything? Zero. You got one person right now out of your whole phone.
Yep.
If you were to get this person on the phone, I feel like right away you need a connection, that human connection.
Yep.
Notice what I did there, Joe. Did you see it?
Not really.
I led the witness.
Yeah.
Right from
you
the
did.
start. Right from the
Well,
start.
Don't tell us how you do this.
Did you honestly, right now, think of anybody in your whole phone? When I asked you, think of anybody in your phone, any business leader. Did it feel like I coaxed you into picking someone specifically?
No.
Close your eyes, please. Power of suggestion. Keep your eyes closed. It's not what you know, it's who you know. What was the first thing I said to you? I told you exactly what happens, what trends are. Open your eyes. Tell us all. Who did you think of? What company does he run?
Sam Altman.
Yeah.
OpenAI.
Oh, Sam Altman, OpenAI.
Bro, how? Unless it's fake, unless they colluded, which you know, you got to believe that Ross Sorkin when he says they're like, how do you do that?
I said every year there's a trend.
You did.
By the way, it hasn't even got as crazy as it's about to get.
No,
Chat GPT 5, it's already built in my brain. Hold on. Take it a step further. What if you were to call Sam and connect, and you want a story, you want a word, you want a phrase, you want something that connects the two of you so that you have a bond. That's what journalism is. It's creating that open atmosphere where you can ask a person a question they've never answered before. 1 word, 2 words, 3 words, watch his eyes. See, he's thinking right now. He's saying, what would I say to Sam Altman? Boom, 2 words. Is it 2 words? I saw kind of a space bar between. Were you thinking of 2 words?
That I would say to him or text him or something.
Yeah. Can't be a whole phrase.
Short, 2 words.
2 words.
2 words.
Don't lie to me if it's one. Why am I going back and forth? Are they connected? Something weird. Think of a letter.
Are they connected?
Don't say anything. You just did something with your eyes that was interesting. Think of one of the letters in these 2 words. You have 2 words. Any of the letters. I want you to reach up and grab an interesting letter out of order.
I'm going to give you. This is going to be a weird one. If you cannot get this, I don't believe that you can get this because only I would know this, and only he would really know this.
Only you and him.
That's what you just asked for something that was personal.
Personal.
That he might remember that
26 letters in the alphabet. You just thought of 1. Is that right?
1 letter.
Nobody does the vowels, Joe.
They don't.
They're too obvious. They cost money and Wheel of Fortune. They have negative connotation. You didn't do a vowel, did you?
Right.
No.
See? CNBC. Want alpha. K. Are you thinking of K?
That's not fair. That's not fair.
Look this way. Swear to them. There's nobody that would know this but you and Sam Altman.
Correct.
This isn't written anywhere. This isn't spoken. This is nothing in your head. Look this way at me. Boom, boom. Rev the engines. Go-kart. Is that it?
Did you guys see what's happening here?
We don't know what you were thinking. Is that really it?
Go-kart. That's literally
Listen to why he was thinking of go-kart.
what I was thinking.
See, I don't. This is why I don't like when he comes in because I get scared.
The first time I ever met Sam Altman, guys, this is probably a dozen years ago. I was at a conference and they had go-karting, and so I thought of go-kart because I thought what would be a personal thing that,
Okay, for those that say this is staged, look this guy up. Look this guy up and go through the next freaking hour of his videos because he's been doing this for 10 years. I thought it was staged too. And then I see him doing it again and again and again and again. And I'm just like, this can't be, you can't fake it that many times. Like Joe Rogan's a no bullshit type of guy. You can't fake it with Joe Rogan. Like, I think it's real and I don't know how it's real, but it really does feel like it's real.
That he would remember that I would remember.
I mean, Joe, anyone watching thinks that you're.
This is so crazy.
They think you're colluding because this couldn't happen.
I want everyone to know there's zero collusion. I can't even fathom. How did you even understand?
He's not going to tell you.
Hold on.
I don't know how to go from here. This one's supposed to be the middle, not the finale, Joe. I had Joe teed up, but now Andrew's having a breakdown on air.
Hold on. Can I say this? This one's a serious situation.
No, I know. It is serious.
This is at a whole other level. How do you?
Andrew is worried what else I know right now, be honest.
That's right.
A.K. Jonathan. You know, I told you.
I thought there was no way. No way. I figured you could guess the first part. Maybe. Maybe.
I said AI is everything that we're talking about. You saw that.
But still.
Don't do an AI company. Don't you dare.
I won't know.
So what did I ask you to do during commercial break? Hold on.
You had like a bunch of cards and they all were
100 companies. Here's the thing. So I tell Joe, pick a random company.
Yeah, you did.
And I feel like senior leadership is what matters at various companies because it's from the top down.
I'm sorry. I can't even get over what just happened here.
This is why I don't want him to do anything to me because I'm scared of Ouija boards and stuff like that because I don't want to be like.
You picked a random
possessed.
company.
Yes, I did.
picked a RAM company.
Off the
Do you
cards.
know? Do you know?
I didn't know, but I know now.
Do you know the CEO of this company?
I do now.
Okay. Count how many letters are in this person's first name.
Yeah.
It's fast, too fast. It's too fast. 4 letters, wasn't it?
Yeah.
Hold on. Here we go. I think I got the name. He did this too obvious. We want a tight shot on Joe when I get this. Close your eyes for me, Joe.
I know you're going to get
Everyone
it.
see that?
I know
Everyone
you're
see
going to
that?
get it. So I'm not going to.
All right.
I'm not going to be surprised.
Close your eyes. First name is Mark. Is that correct?
Yeah.
And get Joe on this. Can we get Joe on this? I want to make sure we get Joe. No, close your eyes, Joe. Can we get Joe? I'm trying to see him on camera. Joe, do me a favor. Tell us all which company, open it up. Meta, Zuckerberg. Is that right?
No.
What do you mean?
That's not the one I got.
Which company is it? Who's the person?
He's going to get it. Mark Klaus.
Klaus.
Campbell's Soup.
Campbell's Soup? I'll go with Campbell's Soup.
Holy, I can't even say this.
Come on, bro. Is that fake? Come on, bro. Like, is that fake, or is this just a different level of what he's doing? And what he's about to do at the end is really going to take it to the next level.
This is not fair.
I'm sorry. Spooky music.
What if though?
It's a
what if?
show.
Here's the question.
What situation.
What if he had picked a different? You know what? Fill in the blank on that, because people always ask me, what if? What if he had done something different? So tell me, what if he had picked? Give us a phrase there. What if he had picked? Say it.
I don't know, like CEO of like the Lego company or something. I don't know, some crazy thing.
What's that? What if he had picked what?
CEO of, I just said Lego.
Lego?
I was thinking of a company I don't know the CEO of.
If he would have picked Lego, then Joe, I think we're ready to go. I think I'm ready if he would have picked Lego.
Okay, can I just say something for a second? I just need to say something. I know we're on TV, but this is crazy.
Did you just come up with Lego for the first time ever?
God's honest. I'm telling you, this is insane what's happening here.
It happens every time.
This is not like some kind of scam. I feel like.
No, but I think he's evil. To be able to do
Hold
these.
on.
Power's only for good, Joe.
How did you do that?
I don't know. I don't know.
I don't. That part.
It came out because I thought I ruined things.
Come on, bro. Am I too gullible to believe that? Am I the one who's gullible? Everyone's saying it's fake. Go through this guy's videos on YouTube and tell me that he's faked it for the past 10 years. Just tell me. Tell me he's faked it for the past 10 years. Like, come on. Like, dude, at some point, when you see it over and over, he's gone on every single television show, and you think he's colluding with, you think he got on Joe Rogan is the most no bullshit guy on the planet. You think he said, hey, Joe, this will be really good content. Let's do this. No, Joe would tell him to F off. Like, there's no way. Watch him on Flagrant. Watch him on Andrew Schultz's podcast. That one was even crazier than this, bro. So you don't have to agree. You don't have to believe it, but it's pretty wild. I've been watching a lot of his stuff, and I'm just like, how does this happen? I don't get it. And maybe it's WWE. Maybe it's fake. Maybe all of it's staged. And I was a WWE fan for a while. It broke my heart when I realized it was fake. But, you ended up realizing it was fake. Just a question of, because if you think this one is fake. I just don't think you can collaborate with that many people on that many television networks. Like, at some point, the rumor is going to come out. People are going to tell people, oh, yeah, that was fake. Like, nothing has ever come out because it's always been, at least people have always said that it's been real. 2 updates on Israel-Iran. U.S. President Donald Trump told senior aides late Tuesday that he approved attack plans for Iran, but has withheld a final order to see if Tehran would abandon its nuclear program, said the Wall Street Journal just 9 minutes ago. And then the Trump Situation Room ended. A meeting has ended as per CBS. Okay, so Wall Street Journal saying Trump was ready to attack, but he's holding off on the final order if Tehran would finally say we are unconditionally surrendering our nuclear program. If not, then it looks like this could escalate. But yeah, I guess we will see how that plays out. Oz Perlman in his name. Just watch some of his videos, bro. Watch some of them. There's always a mole, right? Like, dude, he's been doing this for 15 years. There's someone, this is entertainment, right? Someone would have told TMZ or something like, hey, yeah, that guy's fake. Nothing. And so I'm just saying it's kind of wild. But nonetheless, that's what he said as well. We got a bit of China update right here. Putin says we will conduct military drills with China this year. Putin calls threat from Russia's alleged threat from the East and a way to get more money from Western taxpayers. Okay, well, Russia's working with North Korea as well, so it makes sense that they're collaborating on their military efforts. But the interesting thing about Russia and China is that none of them have actually said we're going to stand up for Iran. So until they actually say we're going to back Iran, then Iran might end up deciding to de-escalate here. All right, cool. That's it. I'll be back tomorrow on the market open, and we will keep going from there. Markets basically flat after hours. Is Oscar still running? Oscar chilling out a little bit, 1960. Him 6117. Circle still up 4.5%. Google up a little bit. S&P basically flat. Robinhood $50 or not $50, 78.50 after hours, 0.28%. Palantir, I think we closed at 139, 139.96, 139.65 after hours. And then again, the S&P right here at 597 after hours right now. Oh, sorry. Yeah, no market open tomorrow. Sorry. We're closed tomorrow. Dude, what am I going to do tomorrow? That's going to be... I've started going to the gym this week already, so I'm going to the gym for sure. I've been going to the gym this whole week, so definitely going to the gym. But that's going to be like 2 hours. Like, there's a whole day, bro. You could still... No, you can't do the show if there's no market open. There's nothing to open. There's no market. I'm going to have to actually think about my life and, walk around and keep dreaming about carp. Go on a long FSD drop. Dude, I love FSD so much. I was filling my dad's Tesla with energy last night. I was charging it up, and he doesn't have FSD, and so it was so annoying to actually have to drive to the charging port. We're getting the one installed in our house. The guy came over the other day, and he's just taking some time to fully install it. But yeah, I don't think I'm ever canceling FSD, bro. I don't think I'm ever canceling it. Okay, we will do an IRL stream one day. An IRL stream would be super cool. You need a little bit of technology to really make it work. You can't just do it on your phone. It's not going to work out like that. But Oscar and Circle deep dive 9 a.m. tomorrow. No, we'll do a 9 p.m. for Oscar for sure. And hopefully we'll do Circle as well. But yeah, we'll do IRL. We'll do IRL eventually. Definitely when I move out. Dude, I'm serious. I was on the phone with Derek today. I showed him the apartment, and he genuinely was like, holy, that's a good looking apartment. You guys will see when you actually see it. I'm honestly really proud of myself on this one because I was decisive. I immediately took action. I didn't wait for anyone's permission. I just said, you know what? This is it. It's always a little bit of a risk, right? Signing a 1-year lease and getting into it. But after revisiting it on Sunday, I was like, I think this is the place. I really do. And he liked it as well. So I think you guys will enjoy it. And I think we will be able to do a lot more content in this apartment, not just market open, market close. We should be able to do a bunch of different things. Whoa, the Lakers are getting sold? Holy crap. Jeannie Buss is getting ready to sell majority ownership of the Lakers. Whoa. That's a big deal. That I mean, even if you don't care about sports too much, the Lakers have been in the Buss family for 80 years, 90 years? That's been a long time. How much is the deal? How much are they valuing that stake at? I would imagine it has to be over $5 billion, roundabout. Los Angeles Lakers, huh? Yeah, LeBron should definitely take a stake. LeBron should try to get a piece of the Lakers if they're selling it. Is it 10 billion? It's 10? Holy crap, dude. That's the largest ever. Even the Warriors are not worth that much. Even the Knicks are not worth that much. Wow. 10 billion for the Lakers. Wow. 10 billion. Now, I don't know if they have a team that could win a championship next year, but still. 10 billion is a lot, bro. 10 billion is not a little bit. It's the most amount a team has ever been sold for, if I'm not wrong. The Celtics just did 5 billion last year. And the Knicks, I think, are worth 8 billion, but they haven't been sold in a while. And also remember, it's the Lakers are not worth 10 billion. Their stake is worth 10 billion. So whatever percentage of the stake is left over could be worth another couple billion. But David says, I told you he starts. It's not my fault if you put something in the comments that causes me to react. Then I keep talking here. That's wild, bro. 10 billion for LA. Huh. You know what I want to do? I want to go to a Knicks game, bro. I've never been to a basketball game, like an NBA basketball game. I want to do that in the fall. I want to go to an actual basketball game. It'll be fun to like see the Knicks versus a really good team. 10 million put it in perspective. Yeah, exactly. We are already making up for no Thursday stream. Dude, watch me go live tomorrow at like 3 p.m. and stay till 9. No, I'm not going to do that. I'm not going to do that. Yeah, TWG did do a deal with Palantir. That's true. I didn't know their founder was worth 10 or had enough money to make a $10 billion deal. That's aggressive. Ed says, dude, I'm the biggest Knicks fan here. Well, Ed, you must have been annoyed by losing to the Pacers. Also, OKC's up, right? So they got one more game. And then OKC might end up winning this championship. Yeah, dude, I definitely want to do a Knicks game next year. That'll be fun. They own the Dodgers too. Okay, so this is just a rich-ass family. Dude, that's the thing. Once you get money in life, once you really compound wealth, like buying a sports team is a luxury. No one's buying a sports team to like be like, this is how I'm going to make money. You've made money in some other way, and you have so much excess capital that you're like, all right, I'll buy a sports team. Because sports teams are not like the most attractive investment opportunities. Yeah, I mean, it's really a long-term thing you have to do. And most of the good deals in the NBA were in the 2000s. And now a lot of them have matured into these valuations, but it's incredible. Pretty incredible. All right, cool. That's it. I'm out. I'll be back tomorrow for the deep dive. Thank you all for being here every single day. As always, deeply, deeply appreciate it. Hopefully people are getting value. I know we got a lot of new subscribers on the channel. Hopefully you guys are getting value as well. And yeah, hopefully if you join into the stream and it's your first time entering, hopefully it's a lot of energy, fun community. And the markets have been relatively strong and we will get through them if they're weak, but the goal here is to try to analyze them pretty much every day. And there is a lot to analyze given all the headlines that we have. I think in the next few hours, we will get an update from the Situation Room as well. So I'll be on Twitter. I'll post about it. So if you're not following on Twitter, you can. But Friday, we will go through all the details on what else is going on. Are we ending or is this actually a fluke? Yo, so many times I have said, all right, it's time to end. I say all the ending messages and then I get to talking about something and then people leave because they're like, all right, I'm leaving because he ended. And then they come back and they're like, bro, you said you were ending it 30 minutes ago. And I'm like, well, for some reason, someone said something. And then we stayed. So there you go. I'm looking for one comment that'll keep me going, but no, I'm done. I'm officially done. I'm good. That's why I never shut it off until you do. Oh my gosh. All right, cool. That's it. I'm out. Thank you everybody for being here. I'll be back tomorrow on the deep dive, 9 p.m. for Oscar, and then market open on Friday. All right, everyone. Have a good. No, you can't just say Trump tweeted. See, you can't do that because now I have to look at it. Now I actually have to look. You can't freaking see. This is what you guys do. Okay, you tweeted about immigration. It's not about Iran, Israel. All right, that's it. Bye, everyone. I'll see you guys tomorrow. Bye-bye.